Hello, good morning. Apologies for interrupting your breakfast for those that are still having some of it. We are more than pleased to have you all. Thank you for making it on time. I must say that we are 2 minutes away from starting our program today. We know that the program probably allowed us to start at 8:30, but our first speaker is already in the house, and we are going to start really soon. So this is just to make sure that our online guests are also already on. For those that are not accessing the link that was shared, please check on our website, that's BDO East Africa, and use the YouTube website to access. We want to make sure that we have everyone in attendance. That's just for housekeeping, really. Then maybe secondly, please allow us, we'll have some media present. We'll also take some pictures. So this is just to let you know that we'll have maybe some pictures taken and shared on our media, if that's fine. And once again, you're most welcome. Signam Tax Breakfast today. Once again, we are very pleased to see you, to have you all. My name is Rachel Kembabazi from Signam. I'll be your moderator today, together with Mr. Echiba Edwin, seated at my left. We'll moderate together this session. And without further ado, allow me announce that our speaker is here. That's Right Honorable Thomas Tayewa. You're welcome, sir. We have the rest of our speakers present as well. We have the Commissioner, Domestic Taxes, Ms. Sarah Chelangat. It's a pleasure to have you. We also have Mr. Aaron Akampa present. That's Head of Enterprise Banking at Stanbic Bank Uganda. Yeah, we also have the rest of our speakers that will be joining us shortly. So without wasting any further time, we are going to start this session. We'll start with a brief opening prayer from Mr. Kansime Taremwa. Thereafter, we'll have the anthems, so I request that we stand right after the prayers, or we stand now, have an opening prayer, and then we'll have the anthems right after that. Thank you.
Good morning, ladies and gentlemen. Shall we bow our heads in prayer? Father, in the name of Jesus, we thank you for this moment. We thank you for the opportunity to gather, to share thoughts and ideas in building the capacity of our nation, especially in tax legislation and in other aspects that make this nation the greatest nation on earth. So we pray that you will inspire our speakers and you'll inspire our listeners with the most holy emotions to come out with the best ideas for us and for the nation and for the continent. To the glory of your name, we pray. Amen.
Thank you. Let's rise.
Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, tuidumu jumuiya yetu.
Thank you. We may now take our seats. Just to confirm, do we have our online audience present? Moses? Okay, so we are good to go. We'll just delve straight to our program today. I'll invite our hosts to give us a few opening remarks. That's BDO and Signum. Thereafter which we'll head to the next chapter of our program. So I'll invite the managing partner of BDO, Mr. Kenneth Makanga. Please give us your opening remarks. Thank you, sir.
Right Honorable Deputy Speaker, we thank you for honoring our invite. The Commissioner of Domestic Taxes, we thank you. Good morning, ladies and gentlemen. Welcome to the BDO Signum Real Tax Breakfast. As you know, this is our second year running when we are holding this breakfast. It is important I share with you why, for us, we are collaborating with Signum to host you here. But more important, I want to share with you the definition of BDO's why. Why does BDO exist? As BDO, we have defined our why as people helping people achieve their dreams. So if you see a BDO staff, you need to make sure you share your dreams, because their core reason and rationale is to support you achieve your dreams. And when we talk about this breakfast, there are basically two whys why we really focused on having the breakfast at this point in time. One, we wanted to actively contribute to the discussion of development of tax laws in Uganda. Right, Honorable Speaker, I have a confession that I'm a believer. I'm a very good believer of Jesus Christ, and I go to church. I actually subscribe to the SDA Church. And there was an important discussion last week in our church WhatsApp group. I'm sure all churches have a WhatsApp group these days. And the discussion was saying that, believers, especially religion, they make you get detached from governance. Since the goal for all believers is to go to heaven, so these things of the earth, you become detached, and usually many believers don't understand their civic duty and responsibility. But I want to assure you, for me, despite the fact that I'm a believer, when it comes to tax, that responsibility comes. I don't need a reminder. And I'm sure, Right Honorable Speaker, right, the people we have in this room, and many are BDO clients and Signum clients, they fulfill that civic duty of being good taxpayers. Okay? And I'm certain the Commissioner of Domestic Taxes, if you ask all the people in this room, they have teens. If they don't have teens, I would be more than happy to support them to register for free. But for us, we want to go beyond registering people for teens. At BDO, we thought would contribute to the discussion. That's why we have this conversation before the bills become into law. We have already interfaced with the Committee of the Parliament, but we thought that was not enough. By having this forum, we amplify our views and really shaping how these laws get to be shaped. Having here the Right Honorable Speaker, Deputy Speaker, who really actually manages this debate, just makes it even more meaningful. So we thank you, sir, for coming. The other second important reason why we have this breakfast is that we know as tax advisors that it is important, if you are to do effective tax planning, to be compliant as a taxpayer. And I'm also actually a good Muganda. And there's a saying in Uganda that echijwa omanyi chinyaga bitono. I think in English, for those who don't know, forewarned, forearmed. Now, these changes that are coming, and the Commissioner of Domestic Taxes will tell you that tax is not an event, it's a process. You need to prepare for it. So we want to really arm our tax payers and our clients to prepare for these changes so that when they come into law, you are ready to comply. Finally, I want to thank the panelists who have agreed to be part of this forum. You're going to see them. And before I hand over the mic to my colleague at Signum, I want to thank Signum for accepting to partner with BDO. But I want to ask all the BDO leaders in this room, I'm not going to introduce, but stand up so that our clients can see those people who are going to help them achieve their dreams. Please. Those gents and ladies are the ones who are going to support you to achieve your dreams. At this point in time, let me ask my colleague Ian to come and say a few words and also invite the Right Honorable Speaker because the lawyers know how to do their thing.
Thank you, Kenneth. Right Honorable Speaker, Honorable Thomas Taebwa. I have the privilege on two fronts. One, we shared a classroom together, so I'm privileged to have been a classmate of the Right Honorable Speaker. But the second one is, when I contacted him, he did not hesitate. Yes, hello. So even with the honors of being Deputy Speaker, he obliged, and I thank you very much, Honorable. Ken has mentioned most of the things, but I will just want to hit on 4 points, just 4, in the next 2 seconds. The first one is from a genius called Albert Einstein. Albert Einstein once said that the most difficult thing to understand in the whole world is income tax. The most difficult thing to him was income tax. And it's not strange because taxes affect the backbone of an economy. They affect families, they affect individuals. We need to respect taxes. But one of the most unfair things, when you talk about, people talk about what's always with us is death and taxes. But what shouldn't be with us is unjust taxation. Why Signum and BDO come together is to make sure that the tax is fair. You get the right amount of tax. To thank the BDO team for accepting to have this discussion, this breakfast for the second time together. And I must say we shall improve it as the time goes on. One of the things we stand by at Signum is nurturing growth and offering peace of mind. And that's why we are with BDO that helps you achieve your dreams. Because they achieve your dreams, but we nurture your growth and offer you peace of mind. And the reason why you have two professional services firms coming together is because we like to collaborate and not compete. Collaboration brings better partnerships, brings better synergies, increases knowledge, and above all, gives better service provision. So I thank the team from BDO, the team from Signum. I'd like to also Signum team to stand up. They're moving around. The Signum team, please stand up. Obukaro, ladies and gentlemen. They're the people that make us look good. The theme for this breakfast is collaborations and not competitions. And I hope we can achieve our aim for this breakfast. At this juncture, without further ado, I'd like to invite the Right Honorable Speaker of the Parliament of Uganda, Deputy Speaker of the Parliament of Uganda, Honorable Thomas Taebwa, to come and give us his remarks. Honorable Taebwa, you're welcome.
Thank you. Good morning, all. The advantage of being an old boy, that you bypass protocol. You invite via WhatsApp, and I be here. Now, because that bypasses the process of assessing the kind of function I go to, because we are surrounded by people okay, good. So the disadvantage of our offices is that you're surrounded by people who control you like a robot. So when an invitation is received, they assess who will be there, what will be the impact of your attendance, will you be promoting a certain company against others, are you going to look like a marketeer? So when I have a brother like Ian, for whom we were together in law school, then he sends a WhatsApp. I also forward it to my protocol team, and I'm like, I have confirmed. So it's up to you to readjust your program. And I'm glad you came much earlier, and we are able to really go through this. I want to thank BDO and Signum for this breakfast meeting. It's very, very important, because such dialogues, they don't only help us to get critical information, but they also help in explaining the work we are doing. We are the beneficiaries. You are explaining our work, which we are doing, and find that you're investing in your money, and we shall even tax you for organizing a meeting to explain our work. Is really good. I wish more could do it so that we can tax most of you and we get more coffers. We get more money into the national coffers. This week we are going to sort out tax bills, starting today. Early morning at 10, we are sorting out the anti-homosexuality bill. It's around one clause. We sort it out, and then we go on to tax bills. So this week, we've already received all committee reports. So now what is remaining is the plenary. And the good news is that we don't have much of the new taxes currently. We don't have much of the new taxes. I know there are proposals which sounded a bit outrageous, and they had caused a lot of confusion. And I want to thank you, you tax experts who came up and explained. I received many, many messages on my phone, and many analysts came to me, reached out to me, some came to my home, and I was able to pass on to most of that information to the committee that is responsible. And the committee had to use that information to engage. So I'm really, really happy because of your push and your feedback. We were also able to engage, and the Minister of Finance withdrew some of the proposals which looked draconian. For example, those to do with tax on assets, whereby they were going to amend the capital gains tax, and then they introduce a new tax on all assets. So that was withdrawn. That's the first good news. That was withdrawn, and we are not going to have any problem with it. That was the most scary part of the tax laws that had been proposed. So I'm really happy. We are going to remain with the capital gains the way it was, without introducing any other tax on the sale of assets. Number two, yes, also the tax on corrective investments was withdrawn. That's also due to you, what we got from you. So now your investments, you no longer have to worry. And I want to thank the fund managers who reached out to us and explained the impact it will have on most of these investments, whereby most of the affected people were young people who are trying to go into circles, who are trying to go into investment groups, who are mobilizing themselves in many ways. So I'm really happy also that was sorted. But you see, our major concern as a country is increasing our tax to GDP ratio. We are now at 13.6. Our target this coming financial year is to increase it by 0.5%. The moment, and if we are at that, the regional average is around 17%. So now, when we look, if we can push our tax to GDP ratio from the current 13.6% to around 19%, then we are able to correct another 9 trillion. We shall be able to bring in another 9 trillion. When you look at the projected tax revenues, the targets we've given to URA, we've given them 27.774 billion for the coming financial year. Now, and we believe this can be corrected. But how do we correct all this? Do we need to introduce new taxes, or we need to improve on the administration of the tax regime in the country? That's where the debate is. I'm a businessman with the aftershocks of COVID. You can't introduce new taxes. In fact, I think it is safer for our economy to say that for the next, 3 years from my projection, we shouldn't be introducing any new tax, so that we first recover as a country. Otherwise, if you bring any tax that will shock, that is going to shock the business community, that is going to shock our country, then we are going to be in trouble. We shall go down. If we can widen the tax base by bringing more people into the tax economy, if we can improve on efficiency, if we can reduce on the corruption in the administration of tax, whereby corruption, me as a person who is in business, who is an importer and who is in manufacturing, we do have a very big problem of clearing agents colluding with URA officials, colluding with UNBS staff. And, there is no good you can clear, basically, in this country, especially for small and medium companies that bring 1 container, 2 containers. It's difficult to clear any container in this country without someone coming to you with a threat, or, for example, saying there is a top-up of 10 million, but if you give 2 million, okay? If you give 2 million, There is a way they will reduce it to only 1 million. Now, most businesses, and I want us to be honest, most businesses will calculate. They will see 3 million against 7 million. When will I make a profit of 7 million out of this? But most of it is unfounded. It's unfounded. But the problem is also the appeal process. So that's why my focus is on administration of tax. The problem is also on the appeal process. When you try to appeal that top up, you go through here. Demurrage is increasing. Your clients are waiting for surprise. So what do people choose? I would rather pay the 3 million and I move. So we have to address that. We don't need to increase taxes in order to increase our tax revenue. For now, we only need to focus on efficiency. And that's why we as Parliament, we have focused on giving URA more money. We want to fund URA so that they can be able to meet all the costs related to efficient administration of the tax regime. The moment we do that, then we believe we cut red tape, we reduce on these leakages, we shall be able to make more money as a country. Of course, the other issue would be now to do with looking at our tax collecting agencies as partners, not as enforcers. You see, the word enforcement, I believe everyone would want to pay tax. So that's why the word enforcement, I don't love it. And the commissioner is here. I don't love forcing people. Yet you can cajole people. You can serve people into compliance. You can make them compliant through service. A very good example. I know very many people have shared with me. They say, man, I have my VAT claims of around 2 billion in URA. But the day you submit a claim in URA, you'll be finished. They will audit you until you close down. I know I'm speaking the language you understand. Yeah. Yes, I know many commissioners, I can see you're shaking your head, but this is the reality. You see, for you don't do business, for us we do business. For you correct from business, for us we do business. And we share. And you see, most of these people are even saved, so they don't go for an evening drink. So that talk is good in a bar. When we are doing those things which God doesn't like very much, having our drink, that's where we get the real story, the reality. But the reality is, we should put in place a regime and conditions that don't discourage people from claiming what is their own. If I have my claim, I should know that I won't face the consequences of coming to demand. I should know that URA will treat me well. And I've shared this with the Commissioner General. And I really appreciate, by the way, there is a lot of improvement in as far as stakeholder engagement from the side of URA is concerned. We are still demanding for more, okay? But there is a lot of improvement. I'm not looking at a glass as half empty. I'm looking at it as half full. But I'm saying make it full, not half full. Let it be full. So it's an issue we have to look at. To me, the issue of being looked at as a threat does not help us. Now, from my side, of course, now I cannot preempt what we allowed and because we have reports coming on the floor, though I've read the reports. But I can tell you, there isn't much we have changed. There isn't much we have changed. So we want certainty. This is the strategy of government, that we should, especially in this recovery period, post-COVID recovery period, we want certainty of businesses to know that where if I'm borrowing and I'm investing for the next 3-4 years, there is certainty on taxes, because tax regime can easily disorganize your projections in as far as business is concerned. So there is certainty. There are issues, of course, there are issues we've looked at, and we've said maybe we've matured a little. For example, we've more or less agreed with government on this of initial allowance for businesses outside the radius of 50 kilometers. That incentive, we believe there are other incentives that can cover it. We are putting more industrial parks. We are trying to look at developing up-country infrastructure. We are trying to ensure that there is water, there are all services needed for you to do business up-country. Land is cheap. We are opening to Congo, we are opening to Tanzania. There are many ways of crossing to Kenya. So we are not looking at that being a very, very strong incentive for you to concentrate your business in Kampala. The cost of doing business in Kampala is now higher than even that one of upcountry. So that one we are agreeing with the government, we are going to remove that one. We are going to remove that one. If you had a partner, if you had a business BDO you are advising, saying no, set up your business outside the radius of 50 kilometers to get an incentive, no, that one we are not going to continue with it. Then also, most businesses, because you see, this issue of carrying forward losses, it has been a very big issue of concern for us. Carrying forward. So now, going forward, I'm sure by the end of this week, we might have decided that you can, if you register losses for 5 consecutive years, then after, we shall allow you to only carry forward 50% of the losses. Okay? Because we don't want you to be in a comfort of paying BDO very good amounts of money so that they work on your books and you only register losses. It becomes an incentive to register losses. Yeah, you know, I'm reaching in a bracket of profits. No, go back. What can we do so that we push losses? No, we want you to register profits. We want you to register profits so that we get some money. So that one, I know very many people reached out to me about it, but we are saying no, at least after 5 years, start carrying forward 50% of the losses. So it's very, very, very critical. Finally, of course, there is we are looking at getting more money from digital services. We are looking at agency banking, 15% on commission, because we are having it on mobile money. So if we are having it on mobile money, why aren't we having it on agency banking? And you see, this dispels the rumor which had come around that, no, it's the banks which sponsored this mobile money tax. Okay? So now we want to strike a balance. Anyone getting a commission, give us our 15%. So agency banking, we shall be charging it 15%, I think by the end of this week, so that commissioner can collect more money and we are able to do roads. Finally, the biggest concern now, we as government, because when you pay your taxes, it should be you to demand for the services. I think now on the political side, we who are decision makers, we have to go back and see where do we put this tax? Because that also becomes an incentive for compliance. Compliance, they want to be about only Uganda Revenue Authority coming in, cracking down, and ensuring that everyone pays. No, it's where we put this tax. Are we putting money into building infrastructure that facilitates business? Are we putting money into health services? Are we putting money into ensuring that the country is secure? Are we putting money into education? Is the cost of doing business in the country going down? Have we reduced the cost of electricity? Have we reduced the cost of water? You know, this is where the focus is on our side as a government. And are we stimulating the economy so that we produce more taxpayers as a country? Because when you look at a country like India, 66% of their economy is on cottage industry. 48% of Germany exports, 48% of Germany exports are from the SME sector. And only 2% of German exports go to Africa. Okay? Now you might be saying, but all this is Germany. Yeah, but only 2%. So how can we tap more into that? How can we negotiate more? How do we add value to our exports? I was at the Starbucks roastery in Milan. They have a small roastery. The biggest is in Amsterdam. Now, the small one in Milan. And Ugandan coffee, 1 kilo of Arabica was sold to me at 45 euro. But from my constituents, which is a coffee producing constituents where we survive on coffee, Arabica coffee, a kilo, we are buying it at maximum $2. So where is the problem? And then you find the whole coffee industry in the whole world of around $460 billion. The coffee producing countries are getting only $25 billion. Now, out of that, Africa gets around $3.8 billion. Uganda, which is Africa's #1 coffee exporter, because the #1 producer is Ethiopia, but they consume a lot of coffee, gets $860 million. Uganda. So how do we, and you find that coffee of $860 million is coffee which on the world market is worth around $20 billion, $30 billion. So aren't we losing tax indirectly if we added value from here? If we got tax on $860 million, what about if we are getting tax on $80 billion? So this is the way we can widen the tax base. We need to think outside the box. We need to have a dialogue with people like you who are in business. We need to open up and we say, what can we do as a country to enable you make more money? What can we do as a country to enable you? Because when I'm going to hand a budget of 50 trillion, and out of a budget of 50 trillion, I only have 22 trillion as a discretionary budget. The rest of the budget is statutory. Only 22 trillion. Okay? Then we are going to be in trouble. We have to reduce our appetite for borrowing, especially this domestic borrowing, which has made it very difficult for businesses to even work. Whereby now banks, you see, whenever you have an economic crisis, banks are registering abnormal profits. Whenever you have an economic crisis, banks are registering abnormal profits in Africa. Why? Reason just simple from, I'm not a banker, I'm not an economist, I'm just an ordinary guy on the street. But from my own understanding, it's because government fails to meet its domestic revenue taxes, goes into a borrowing mode, and who is it borrowing from? Banks. auctions, 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 auctions. When you look at our domestic debt to GDP ratio, and you compare it with overall domestic debt to GDP ratio, and then you again look at our tax to GDP ratio, you see a very huge mismatch. This is what we must go on. So I want to thank you for inviting me. I wish I had more time so that we can even have a much longer dialogue, and you received some questions, but unfortunately, I'm rushing for other businesses. I just want to once again reassure you that nothing much is going to change in the tax regime of 2023-2024. We have maintained stability, we have maintained predictability. Apart from a few tweaks here and there, our major focus has been on ensuring that we have more efficiency in the tax administration, the administration of tax regime. We widen our tax to GDP ratio by increasing efficiency and bringing more people into the tax payment bracket, those who are supposed to be paying, but not by introducing new taxes. I want to thank you.
Thank you very much, Right Honorable Thomas Taiwa. Thank you for those remarks, for that keynote address. Another round of applause for the Honorable Deputy Speaker. Thank you very much. We're just seated and talking about this and saying that the Deputy Speaker has actually run through almost all the amendments for 2023. So thank you very much for this insight. Maybe just for the people that didn't know, there are quite a few. I'm just going to inform you that about 6 or 7 tax laws have been amended this year. For those that actually don't know, we have the Income Tax Act that has an income tax amendment bill that is being tabled. There is a Value Added Tax Act that has an amendment bill. Excise Duty Amendment Bill as well. There is a Tax Procedures Code Amendment Bill. The Lotteries and Gaming Amendment Bill. Convention on Mutual Administrative Assistance in Tax Matters Implementation Bill. This is a new one. We can't wait to hear about it. Then the Traffic and Road Safety Amendment Bill. Those are the tax laws that have been amended. We also have some that have already been passed into law that are going to be deliberated upon as we move along. So yes, I also just wanted to inform us that we have breakfast. For those that haven't picked or grabbed something to eat, please find your way out and slowly pick something to eat so that you don't sit on an empty stomach. And also for housekeeping purposes, I thought we should run through the program briefly. We'll have the next remarks or the next speaker. That will be the CDT or Commissioner of Domestic Taxes. That's Ms. Sarah Chelangat from the URA. She's going to present URA tax compliance concerns and administrative actions. Then we shall have Dr. Fred Mohumuza after that, presenting on the Uganda's economic outlook, because the two of course go together. Nothing explains tax without having an economic outlook on a whole. Then we shall also have a presentation of the tax bills. That's from our host, BDO and Signum Advocates. We will then have a panel discussion from the business leaders or owners. That's on understanding the implication of these tax bills in the different businesses, different sectors, different industries. So we'll later have that discussion. And then finally, we'll have a Q&A session. So I'll just allow Edwin to take us through the next session as we prepare to have the next speaker. Thank you.
Thank you, Rachel. A very good morning to all our dear guests. Ladies and gentlemen, I think the Right Honorable Speaker deserves another round of applause. He has been very spot on. Yeah. At least he has given us a sense of comfort. Yeah. The framers of the law are listening to the tax consultants, listening to the taxpayers. If you're very keen, if you listen to all these proposals, what Parliament is thinking, I think they're speaking the same language with we, the tax consultants, we, the taxpayers. And yeah, we really can't wait to see the next process in Parliament. We can't wait to see the draft bills that are coming out. And yeah, BDO and Signal, we're always here. We shall be very happy to guide you through, take you through these amendments, what applies to your business and what you should be very keen about. Ladies and gentlemen, we're very honored to be graced with esteemed speakers. And our next speaker is someone from the URA. Very many of us are not happy with the URA, but at least we need to give them a listening ear. Let's listen to the CDT. Let's listen to. Sorry about that. Yes, we're going to give a chance to the URA. Let's listen to the URA. What plans do they have for us? What's their route? What do they have for you, the tax? Sorry. Yes, and I'll have the honors to introduce our next speaker. Our next speaker. Yes, I'll have the honors to introduce our next speaker. Our next speaker is Mrs. Sarah Chelangat. Very sorry, that's a technical glitch. Yes, ladies and gentlemen, our next speaker is Mrs. Sarah Chelangat. Sarah Chelangat is currently the Commissioner of Domestic Taxes. That's a very vital department in URA. Yeah, they touch base with most of our taxpayers. So Sarah Chelangat is currently the Commissioner of Domestic Taxes, and prior to that, she served in an audit firm, Ernst & Young, where she served and she left as an associate director tax. Yeah, but prior to that, she had also had a brief career with the URA, where she was involved in tax audits. So our current Commissioner of Domestic Taxes is someone who has listened to the taxpayers. She has acted for them. She has advised them, and we're very confident she has taken the same faith to the URA, and we hope she's advising her colleagues as well to always listen to the taxpayers. Yeah, always look out for the taxpayers. Yeah. Her CV is on the screen. We can keep reading on it, but in the interest of time, ladies and gentlemen, allow me to invite Mrs. Sarah Chelangat, the current Commissioner of Domestic Taxes. Thank you.
Thank you, Edwin. It's with Edwin in EY. The difference between me and him is that he is a land friend. You know, lawyers like calling themselves land friends. I don't know whether we didn't learn, but we can leave that discussion for another day. Thank you so much to BDO and Signal. Thank you for leading from the front. And this is your next year holding this. I was telling Ian this year seems to be much better in terms of attendance. Last year we still had effects of COVID. Thank you for supporting us in collecting tax, in bridging the gap between the taxpayer and the tax administrator, the gap of tax compliance. The speaker was talking about URA auditing you when you put in that refund claim. Auditing you up to the last all the tax heads. That one will come if you are not compliant. Actually, many taxpayers who are not compliant will not be daring enough to apply for tax refunds. All URA does is to be sure that what we are refunding you is not money that we should have kept back to offset on your tax. Otherwise, thank you so much. The tax bills are here round the corner, and every year, as economists, as lawyers, as tax agents, accountants, it becomes exciting to be part of this agenda. And you know, in taxation, the main thing that you need to know is the current laws as they are, the changes as they come in, and how they impact your business. So you surely need to be near your tax advisor, your tax agent, and your tax administrator. We also do tax education as the tax authority to support our clients. We do engagement seminars, and we will do also a breakfast as URA to engage our taxpayers and run them through these bills. Tax grows even where there is no rain. That is a Jewish proverb. Even where there are no rains, tax grows. So you don't want this tax to grow and overwhelm your business. Taxes, if not managed well, can cripple businesses. And that's why we are discussing today tax compliance risks that the taxpayer should be aware of. The first and foremost is sleeping on the job. You don't even understand the changes in the law and how they impact on your business. You don't even want to know what is happening, because in the first draft bills, we had all those changes. Now some will be dropped after Parliament discusses this week. You need to track so that you are up to speed with your tax issues. We shall discuss this agenda, that is the presentation outline, looking at compliance, the ability of the taxpayer to do the right thing, file the tax returns on time, pay your taxes on time, and do the right thing, and not connive with our tax officers to do the wrong thing. You know, it's now very difficult with automation. Those days, somebody would hide the file, and it would real die, you would never see it. But with the automation, there is a lot of transparency. There will be a trail of that file. So you can't delete things permanently. So we will also look at URA's compliance model, and then the tax compliance risks, URA's action in improving tax compliance, and consequences of non-compliance. We are here to mobilize revenue for national development in a transparent and efficient manner. Last night we were in NBS and UBC to touch base with our taxpayers from a national level, to update them on what is happening in URA, what we are doing, and what they need to know, and how we can support them better, and most importantly, calling them to come and support us, pay tax as Ugandans and as patriots who want to develop our country together. So the vision is a transformation service, revenue service for Uganda's economic independence. We can only be independent if each one of us pays a fair share of tax. Just to once again say thank you, all of you in this room. I know you all have tax identification numbers, as the Deputy Speaker said, and you all pay taxes in your respective capacities. So we shall discuss about compliance. Compliance is a very wide topic in taxation. Just doing the right thing, filing returns, avoiding dishonest reporting, ensuring that you plan your tax affairs correctly without doing any tax evasion activities. So it's a structured way of understanding and improving taxpayer compliance through understanding factors that influence behavior and applying the most appropriate compliance strategy in ensuring that these taxpayers, in ensuring that all our clients pay their taxes timely. Compliance management takes place at all points, and it's important that you are in contact with the tax authority so that you are not limited with any information that can come your way. Compliance has been enhanced in many ways by the tax authority through automation, digital platforms, and making it very easy for taxpayers to approach our services, to use our services. For example, in taxpayer registration, we don't need you to come to URA. You can do all this within the confines of your office. You can apply for a TIN now using your phone. You don't even need to have data. We have what we call the instant TIN, which you can use to apply and you get the TIN immediately. It's instant. So the TIN is given to you, and it's really a game changer for all of us. You want to apply for your driving permit and you need to pay URA's fees. You need a TIN to do a small transaction like transferring your land. Without having any business, you are just transferring a land title. You will use that instant TIN to get the TIN to transact. You don't need to do any interface with the URA officer. We also noted that with the interface with our URA officers, those are areas where corruption is initiated. So as much as possible, we are looking into that. Taxpayer education and onboarding services. After registering these taxpayers, we have a 3-month window within which to onboard. The onboarding process looks at educating these taxpayers on their rights and obligations and our expectations of them as taxpayers with regard to filing and payment of taxes. So that onboarding process takes 3 months, and after which the taxpayer now is transferred from the registration section into the compliance section. And the education still goes on. We now have a state-of-the-art contact center. The contact center has all the equipment that is supposed to support communication, dialogue, those conversations with our taxpayers. You can now call our contact center toll free. You can WhatsApp us. You can send a Twitter message, Facebook. You can send an email, and we should be able to respond. The contact center currently works up to midnight, but we have plans for it to work 24 hours. And it works over the weekends as well. So when you see that email of services at URA, that is our contact center. Yesterday we were in some engagement, and some clients were saying when they see that email of services at URA, the heart rate is not the same. It is not the same only if you are not compliant. It is good to hear from your tax administrator, because then you are able to know your filing status, your tax compliance status. So filing declarations, timely filing of returns is very important. Among the canons of taxation, we look at certainty and convenience. The taxpayer must know when to file this return, and the time should be sufficient as a notice period. For business income, we have a 6-monthly time. When they say by the 6th month, by the 12th month, final taxes are usually paid after 6 months from the end of the year of income. That is quite a good time but you can still file your taxes now. For example, if your year of income is 31st December, for December 2022, you still have from January to 30th June to file this return. So there is a lot of time that you can use to plan your cash flow to file the returns. There is also a difference between filing the return and paying tax. When you file the return, you save yourself the penalty for filing late. But when you pay the tax in time, you also save yourself from late payment interest, which is 2% per month. Now, timely payments are also important because when you do not pay in time, that is deemed to be a loan that you have got from government. And like any other loan, it will attract interest. So that 2% is really a payment in respect of this debt that you owe government. Audit and enforcement. Now, audits are supposed to support you, improve on your compliance. We normally have a number of audits that we do. For example, we have what we call compliance advisory, which come through return examination. When you file your return, we normally do what we call face vetting, just to look at, on the high level, the numbers that you have posted into your return. And then we come back to you and ask some few questions that will inform your compliance status. Now, those are very good because it then helps you to fix some of the things in a timely manner. Audits also help you fix. If, for example, it's a payee audit, you are able to now comply going forward, and it gives you some certainty. So it's important that you stay away from some of those audits and stay away from enforcement. We really don't like to do that enforcement because it's not right. We just want to work with you in a very cordial way, remind you very politely, and you pay your tax. Yeah, so the other one is dispute resolution. These are now tail ends when compliance becomes a problem. You have to go through that controversy phase where you do objection, appeal, you go to courts, and then even when you go to courts, we still have the appeal mechanisms through mediation where we discuss. If we are able to close at mediation, well and good. But we still say we can work better. We now have a voluntary disclosure window, which you can take advantage of. If you do your self-health check and you feel that if I wait for URA to get me, they will charge the penalties and interest. You can come to us, come with clean hands. That's what the lawyers say. And then we shall waive that interest and penalty, and you pay the principal tax. It's part of compliance, really. Those are initiatives that you can pick. What we normally tell clients when I was with EY is that be near your tax advisor. But I can now tell you, be near your tax administrator. Don't fear to come to us, and we discuss together how to support you to comply. So that is our tax compliance model. It stretches from attitude to compliance and then compliance strategy. Attitude to compliance. We start with the taxpayer willing to file the returns, willing to pay tax on time. That is a compliant taxpayer. And for that, we don't knock into your doors all the time. That email of services will not come to you all the time. It will only come thanking you for paying your tax. Then the other one is those that try but don't always succeed. You file this month, pay 50%, don't pay 50%. Don't file the next month. The other month, again, you pay. So your ledger becomes so messy, and then even us, we fail to track you. That is now where the whole problem starts. Then there are those who don't want to comply, that we have to just keep chasing all the time. Every month we are doing an agency notice. We are agencying your suppliers. Every month we are sending you reminder letters. That is the type of taxpayers that are not compliant. Then there are those who have decided not to comply at all. You run a business and you do not comply. To tell you the truth, from my experience as both a tax administrator and a tax advisor, if you are doing business and you do not want to pay tax, that business won't grow. Because if you have to grow, these days they will ask you for an e-freeze invoice, isn't it? There is some guy from our village down there in Kapchorwa. He does transportation, illiterate, semi-illiterate. So he was transporting barley from Kapchorwa to Ginger, Nile Breweries. And then they asked him for an e-freeze invoice. So he was telling me, Sarah, there is this tax called e-freeze. How do I handle it? So I told him that, welcome to the tax world. You know, when you start engaging with the big taxpayers who are giving you big business, there is no way you can fail to comply. So he had to register for VAT. He had to start filing. I had to get for him a tax agent. So it's really important. That's why we come here to work with stakeholders like you, because we appreciate your support. Signam and BDO, you do the best to help us as tax administrators to bridge our link between the taxpayers and help us to educate these taxpayers, help us to have the taxpayers pay their fair share of tax. So on the compliance strategy, as URA, we try to make it easy, especially for the compliant ones. You don't have to come to URA. Go to the online portal, file your return. We thank you for that. Those who are not willing to comply, we support them to comply through monthly reminders, etc. We have what we call a compliance calendar. You have from 1st up to 15th to pay the monthly taxes. Pay as you earn, withholding tax, VAT, excise duty. If by 15th you have not paid, we give you up to 22nd. From 23rd, we start sending you that love letter. What happened? We have not seen this tax come through. What has happened? So we don't want to reach that point. We want you to voluntarily. And we have clients who are very good. They will proactively engage us and say, this month we have a cash flow problem. Please allow us pay by 27th. And we understand. We allow you to pay in installments. So please, let's engage. In domestic tax, our tagline is engage, accelerate, and surpass. We feel that when we engage our taxpayers, we shall be able to surpass this target. We shall be able to collect all the tax that we need. Sorry. So the ones who don't want to comply, we help them not to fail to comply. And then, again, still reminder notices, final reminder, second reminder, and then finally we use the full force of the law. This one really comes at the tail end when we have exhausted all the other enforcement methods. The full force of the law comes through agency in your business accounts from the banks. We ask the bank to send that money. But the banks have been, they are between, you know, like how you are in between a very good client and now the tax authority. So when they see that, they tell the clients, please go and sort because we don't want to be on the wrong side of URA. So we do that, but we are also aware many of our taxpayers don't keep their money in the bank. They keep it in the phone, and others keep it in their homes. So we agency your suppliers. we agency your suppliers, and then they are the ones who will pay. So we don't want to reach that point. The last one is also very forceful, where through our debt collection unit, we come and close your business. We use auctioneers to come and close your business, and these auctioneers come in very rough, and you have to pay the auctioneer. So you see, you don't want to reach that point. And then the last one is closing your business. There are instances where taxpayers run their businesses within their homes. So the family is there, the business is there. Now when we come to close and the family is there, you can imagine. That is very risky. So we don't want to reach that level. We want to work in an amicable way. Tax compliance risks. Taxpayers with the inaccurate and incomplete contact details is a very big risk. I want to encourage all taxpayers and tax agents, tax advisors, encourage your tax or clients to use a group mail, finance@bdo. something like that, finance@Signam. Because if you use an individual's mail, it becomes a problem. It becomes a problem because when that particular individual resigns from the company, you may not remember to go and amend your details. So as URA, we keep sending the messages, hoping that you have received, and you miss out on very important communication. This affects your compliance. So it's important to have accurate details. Even the contact details should be a number that will always be associated with the company. Such simple things are very, very important. Number 2, inaccurate and wrong taxpayer declarations. As tax agents, let us support our clients to have financials, to have tax records that speak to their integrity. Gone are the days where you will just tell a taxpayer, how much do you want to pay? Because with automation, there is a lot of transparency. You tell a taxpayer that, okay, you made 100 million, no, you pay URA 50. Those people also, they ask for too much tax. Forgetting that we shall use third-party information. This taxpayer could have been contracted by another company for this particular supply, and the company withheld 6%. We can trail. As soon as this taxpayer files like this, the advisory letter comes. We have noted through third-party information that you actually sold 100, not 50. Please, can you amend your return and declare the correct tax? We used to have a client, small and medium, who was doing that. And you know, as tax advisors, you always put a disclaimer. You tell them to sign on their return and tell them that this is based on the information that you have given us. And anything outside this will be your own problem. So let's support the taxpayers and educate them on the implication of under-declaration or inaccurate reporting. It will not save the taxpayer much. Now with electronic fiscal receipting and invoicing solutions, the e-freeze, we just see through. What you are declaring here is what we see in taxpayer B. If we don't see it there, we shall tell you where did you sell to. We don't see it here. So it has become very, very seamless, and we don't need your manual records. Everything is in our system. Even the refunds now will be faster, because we don't need you to bring those box files of manual invoices. All we need is for you to have billed all your invoices in the system and to be compliant with other taxes. For VAT, we shall be able to know that actually you are eligible for this refund. Under a non-declaration of taxable income, same thing. We shall be able to get you. It's just better to do the right thing. This one catches up with you, and with penalties and interest, it becomes very, very difficult to run business, because cash flow wise, you become crippled. There is a client we one time went to for a board meeting when you are presenting financials. We were tax advisors, and another big four were the auditors. So in that board meeting, apparently these auditors didn't have anything in their management letter except under provision penalty of 20%, which was about 300 million. So they needed us to explain how the under provision came. The board were very, very tough. The board chair was a lady who was very tight. So I now took up the mic and explained. So I told her, Madam Chair, we rely on records that are provided by your company, and we file the returns. These same records are also audited by your auditors. And that is exactly what we put. And tax is a creature of statute. If these do not speak to what ultimately comes through, then the penalty comes through. So if there were further adjustments to the income, for sure, that is management's task to explain better. So those are some of the tough decisions that you take as a business. Inaccurate and wrong offsets and losses carried forward. For example, VAT. You find taxpayers creating fictitious offsets to just wipe away any potential VAT that we would collect. Now, those are really very bad. And we will be tempted to do a double the tax for fines, which we don't like. So all those are compliance risks. With automation, we now have flags within our system. If your offset is this time different, it will flag us. If your tax declarations have come down, there will be a flag. This taxpayer's business has gone down this month. Then we come to you, what happened? Did anything change? Because we also look at your historical perspective to determine the expected tax and your compliance track. Late filing of tax returns and late payment. This is the best tax planning you can do. You don't need to go to an advisor to tell you about this. Compliance is all about filing on time and paying on time, planning for your tax. As businesses, you can have a separate account to just take care of statutory payments, NSSF, URA taxes, so that you do not have those nightmares of waking up to that email from URA. Manufacturers and importers selling unstamped goods. We now have DTS, digital tax solutions for excisable products. If you sell products that are not stamped, it means those products have not paid excise duty. And those are all risks. The penalty here is 50 million. It's very punitive. For IFRIS, it's 6 million per invoice that is not fiscalized. If you do not have that fiscalized invoice, 6 million. We are running a campaign for IFRIS called Par Sitiange, and we will ask the public to ask for that electronic invoice. When you go to the supermarket, to the hardware shop, ask for that fiscalized invoice. It will have a QC code. You will see that barcode down there, and then you know you have actually paid your tax. Let's be proud to pay our taxes. When you have that fiscalized invoice, you will know that URA has received my tax. But any other invoice, you will not be very sure. So these are all areas where we are saying we can do better and support URA in collecting tax if we are all vigilant. So let's have our goods stamped. If you are a manufacturer dealing in excisable products, let's have these goods stamped. Failure to pay declared and assessed tax liabilities. About last month, I was looking at one of the taxpayers in manufacturing. This taxpayer were going to do an agency notice, then they called. So I called for their tax profile. I looked at the profile. They file like 300 million, they pay 50. The next month, file again 350, they pay 100. The next month, file 100, pay 100. Meanwhile, you have the other past periods unpaid taxes accumulating interest. So the ledger grew and it was terrible. And remember, VAT compounds the interest. So it is very, very difficult to manage compliance if you do that way. Failure to pay declared taxes and assess tax liabilities. Self-declared taxes, but you have not failed, it's because you didn't plan your cash flows very well. What is your priority as a business person? Even when you audit, tax is a significant account. Auditors are increasingly looking at tax compliance as one of the key accounts in determining their decision to either qualify your financials or not. Selective issuance of IFRS invoices and invoice trading. I've already talked about IFRS invoices. If you do selective issuance and we find that non-fiscalized invoice, you can imagine 6 million. There is a taxpayer who came to me, he has a supermarket. The invoice that we had penalized was through mystery shopping. Our staff come and shop in your supermarket. They just buy a bottle of mineral water at 1,000. And that invoice doesn't have a stamp. It's not fiscalized. That 1,000 generates a penalty of 6 million. So this guy came, some taxpayer who is in his almost 70 years. So I told him, Mzee, we think you just have to put the system to run continuously because this impact is too much. And he had like about 5 of those penalties, 6 million, 6 million, 6. That is how much? 30 million. And once that penalty sits in our system, there is no way anyone can reverse it. It's only the minister. Huh? My colleague Gerard is there, he will tell you. He is the one who can advise the minister to reverse that penalty. But for us, we don't have a power to do that. So you feel so weak to listen to this taxpayer, but at the same time, you are like, anyway, I can't do much. Actions to improve tax compliance. As URA, we want to support you to comply. That's why we take time to come to meetings such as this, to listen in, to work with our tax agents, our tax advisors, to serve the clients and to serve our country. All of you who have come for this breakfast, thank you so much for making time, because tax knowledge is really good. Action number 1, implementation of modern tax systems, e.g. electronic fiscal receipting and invoicing solutions, digital tax stamps. All these are automated solutions to improve tax compliance. If you do all your things in the system, life will be very easy. We are now introducing what we call pre-filled returns, hopefully effective 1st July, whereby as you fiscalize, your VAT return is being populated. So when it reaches the end of the month, you will immediately know how much VAT you will pay, because everything that is fiscalized is what we refund or is what we approve. So you will know what you will pay, and it is very clear. And that is really very good. By the time you look for BDO to help you, they are just helping you to validate. So we are making it very easy for taxpayers to comply. We have set up a modern contact center. That's what I've already talked to you about, to handhold our clients to comply through calls, mails, WhatsApp. All the social media platforms are there. Conducting regular data analysis activities and issuing taxpayers compliance advisories, self-help checks, self-help reviews. We did a number of these letters in February, either February, late February, and we wrote to taxpayers. Review your transactions, and if you find any taxes, please voluntarily pay that tax. We will not come for you. Clean up your house. So you just engage your tax advisor to help you do this. This way we really support each other. Don't wait for us to come and look for you. So those are some of the things that we are doing. And then also, we don't wait to come to you after 3 years. As you file that return and we find any red flags, we immediately send you a letter, an email. We have noted that there is this variance between your VAT returns and withholding tax. Please review and amend your returns. And now, many taxpayers count that as audit. When they come, they say, I have had so many audits. I don't know, why don't you save me? Those are not audits. We are just trying to tell you, please, there is a red flag here. We are not coming for you, but correct it. Don't wait for us to come after 2-3 years. Implement fair tax payment mechanisms like MOUs, Memorandum of Understandings on installment payment of taxes. This has helped our taxpayers so much because after coming out from COVID, many taxpayers had cash flow constraints. Giving them withholding tax and withholding VAT exemptions. Currently, we have put in the window for application. Please encourage your taxpayers to apply and just make sure that they can fit in the checklist for the applications. We have also introduced the fair dispute resolution mechanisms under objections. The objection team is quite objective. They will do for you the right thing. They will listen in to you and just make sure you have your documentation, because tax is all about records, documentation and law. There is also the window for ADR, alternative dispute resolution. We are finalizing the regulations, and this will streamline that. And then we have the voluntary disclosure window. You can choose to voluntarily disclose your taxes, and we will waive the penalty. We hope that if those bills are passed, there is a proposal to bring in an amnesty window for taxpayers that pay their principal taxes, and then penalty and interest will be waived if that principal tax is paid between July and December this year. We feel that this will help our taxpayers to comply, because all the after effects of COVID are still on there, and it will also help the non-compliant taxpayers come out of their hideout and say, anyway, let me just pay. Things these people have done this to us. So if that is passed, it will be good. We are building strong relationships with private and public sector through engagements. Engagements such as this are very important for us, because then we come and listen in, and then we also come and talk with you. Segmentation of taxpayers into large, medium. There is the petroleum and mining division. We have small and medium or micro taxpayers to enhance service quality. We have also segmented taxpayers based on sectors. Sector-based segmentation is very important because, number one, it helps us to be fair in that sector. If we are treating taxpayer A in manufacturing as such, we should also have a similar approach to other taxpayers. So this is very, very important. Inability, actions in improving tax compliance, inability or delays in delivering essential services to the public by the government due to limited funds, enforcement actions like agency notices. These are the things that we do, but we rarely. Penalties and interest accumulate over time. All these are problems. And then frequent unwelcome audits are costly. Consequences, these are actually consequences of compliance. Delays in processing tax refunds, tax clearance certificates, and other services at URA. We have had a very bad experience on taxpayers who come to ask for TCCs. You go and sleep, then you wake up, you see this contract, which is the real game changer for your business. Then now you come. You apply online. And then URA tells you there is this tax on your ledger. You didn't even check on the ledger. It becomes a problem. We have currently constituted a project to manage ledgers. We want these ledgers to be fully reconciled by 30th June. We have started with the large taxpayers and medium taxpayers. We are at 60% of the completed ones. So we have about 40%. We have about 50 staff manning this project, headed by a manager. So we are really committed. We understand the pains that our taxpayers have on ledgers. When we call you to come and reconcile, to come and discuss with us issues to do with your ledger as far back as 2013, 2010, don't say we are opening up the statute of limitation. We are not auditing. We just want you to give us documentation and we reconcile that ledger, because a reconciled ledger creates tax stability for your business, which is very, very important. Non-compliance also creates reputation loss. Non-compliance damages the organization, leading to loss of business, frustrations. We have had instances where we agency taxpayers who supply oil and gas. And those oil and gas licenses, the multinationals like Total, ENP, Talo, and Sinop. If they get to know that you are not compliant, they take compliance very seriously. You can easily lose your business. So that is what it really means. And then you can imagine your bankers calling you that URA has frozen the account. You cannot remove any money from the account. It's very bad. So all these are consequences of non-compliance. Maybe just to talk again on audits. Audits are very costly to the business. They take up a lot of your time that you would spend in concentrating on business. Audits take on a lot of resources. It disrupts the operation of the company. And this is a consequence of non-compliance. So you don't want to be really in this. In conclusion, taxpayer compliance is entirely a matter of the taxpayer. The tax authority will all that the tax authority does is to help you to enhance tax compliance through all the activities that we have done: automation, writing to you those reminders, engaging you on a constant basis. Like I told you, we now get alerts from our system on any potential tax risks. The taxpayers will know. So as soon as we get those alerts, we immediately communicate. So that is very, very important. The tax authority comes in when the taxpayer fails or refuses to comply and is required to use those enforcement procedures. URA is keen to support, enhance tax compliance. It is our humble prayer that you actively join us in collecting the tax revenue required to build our nation by fulfilling your tax obligations and spreading the message of taxpayer compliance to all our contacts. If we pay our taxation, paying tax is actually a sign of civility. And when you pay tax, it's also a very good sign of being patriotic. If you love your country, you pay your tax because you want to develop your motherland. Thank you so much. Once again, I just want to thank BDO and Signal for this tax breakfast. And as partners in revenue mobilization, we sincerely appreciate your support, especially in domestic tax revenue mobilization. Next financial year, our target is 30 trillion, and domestic tax collects about 65%, 64% of that. So tax agents are very key for us. We are streamlining the tax agent relationships for domestic tax. We have been able to put the applications down there, the adverts. Feel free to apply to be a tax agent and pay the fees. We shall vet you and give you the license. Otherwise, we are here to work together because with compliance, with you as our tax agents, we are sure that we shall get our clients supported, and supported not to be involved in unethical practices that will erode tax revenue that would have been potentially collected. Once again, thank you so much for listening to me, and thank you for being part of the taxpayers that contribute to the 25 trillion of this year. Pay your taxes in time by 30th June or even before. And let us pay the correct tax. Thank you.
Thank you, Sarah. Ladies and gentlemen, I think Sarah deserves another round of applause. She has cared enough to take us through URA's practices. Compliance is a very key problem for our taxpayers. Yeah, she has been very detailed in terms of what you should look out for, and what we as BDO, we as Signam, what we shall be advising and encouraging you on. I think it's very important for Sarah to also take back some feedback, from we the taxpayers, we the tax consultants. Yes, we appreciate and we take note of URA's very many initiatives, to better the tax framework, but also a few challenges are being noted, we are nearing the end of the financial year, enforcement recovery is becoming a problem. Then also the tax bracket. URA focuses so much on the compliant clients, The very many taxpayers out there who are very non-compliant, they're not registered, but now URA will come to you who's already paying the taxes. You're the very person they'll keep assessing, so the URA should also grow, its tax bracket. Yes, to our dear audience that is joining us online, we appreciate you. And for those of us who are not able to make it, the breakfast is also proceeding on live, on Zoom. Reach out to anyone from Signam, anyone from BDO, you can get a link, you can join in. But also, if there are any issues regarding Zoom, feel free to join in on our YouTube channel. It's BDO East Africa, It's also proceeding live. And yes, also to those of us who have seen on our tables, we have a copy of our alert that's prepared as BDO and Signam. Feel free to keep looking through it, because that's going to be the nitty-gritties that our subsequent speakers will be taking on. Then also for those of our colleagues who are joining, for any of our colleagues, any of our clients who are joining in online on Twitter, there's a hashtag that has been shared and created. It's Tax Breakfast 2023. Tax Breakfast 2023. That's a hashtag, to carry on the debate even on Twitter. So any of you with questions, please note them. Our panelists are still available. Sarah is still around. Our other panelists available. Then those online, please take note of the Q&A. Keep noting your questions. We're taking note of them. And yeah, our panelists are going to respond to all your queries. Can't stop thanking you now for joining us. I'll invite my colleague Rachel to come and invite our next speaker, who's already with us. Thank you.
Thank you, Edwin. As Edwin has also mentioned, please keep your questions coming. We are not ignoring them, but for the sake of keeping time and making sure that we are out of here in time, we shall have a Q&A session at once or at a go once we've allowed our speakers to finalize. So without taking up any other time, I'll invite our next speaker. That's Dr. Fred Muhumuza, that is already present. This is the country's economist. I needed go through his entire profile because it speaks for itself. I think for anyone that has met and interacted with Dr. Muhumuza knows that he just lives and breathes the economy of this country. So please allow me invite Dr. Muhumuza. You're very welcome, sir. And we'll let you make your remarks. Thank you.
I'm asking whether that looks like me. Okay, that saves time. So I'll not introduce myself any further. That's again the other details around me. I come to you from the Makerere University Business School and the main campus as well. Still Makerere University for me. So where you look for me, you need to call to see whether I'm the other side or the other side. But by running around, I'm not dodging taxes. I was tasked to look at the outlook. And the first thing you get into is what is Bank of Uganda thinking about the outlook. So you're saying that we have inflationary pressures that are reducing. We have declines in crude oil prices, and we really have these conversations as economists. Reduced supply and challenges at the global logistics. These are the things we are told were driving prices last year. And quite often I ask, what did we do about them for inflation to come down? Nothing. The world did many things for us and they came down. Meaning that our outlook must also be looking at what is the world doing or not doing, not what is Uganda doing. So that's one of the key messages really that I would want to bring into the picture, that when we do the outlook, we look at what is Uganda doing, but also what is the world doing and what is it not doing. So a number of things have happened, but all we know that inflation has come down, the shilling has weakened since the beginning of the year, but it was strong relative to our trading partners, and we'll see who those are and what else is happening among them, which might also project our outlook as we go forward. Those are figures of the inflation. We're actually seeing it beginning to come down, but the crazy thing about inflation coming down is because of the nature in which it is computed. So the inflation we are looking at as of March, we are saying what were the prices in March 2022. So we all know the prices in March 2022 were very high. Fuel was 6,000. Now it is 5,000. So by default, that inflation will come down. But of course, so the interesting part you want to watch is the month on month. What happened between February and March? But that brings in seasonal effects. Some seasons are bad. I'm glad Cabinet on Monday refused to allow people to import rice tax-free. Can you imagine? By seasons, this month we are beginning to harvest rice. So the prices of rice are bound to be high in April because we began planting in February and March. And rice takes 90 days to 100 days to mature. So that's inflation you ignore. Don't get worried about it. Don't lose tax for cases that are going to resolve themselves. And don't deny the farmers that high price. They need it so badly to pay school fees for May. So I am very glad with the cabinet decision to ignore that thing, but I'm very annoyed with the Minister of Trade, who even went with that idea. So if anybody sees those friends of mine in the Ministry of Trade, they should not have celebrated Labor Day. But anyway, they did. What's the external sector? That's where the bulk of our outlook, apart from things happening inside, are. Toward the end of 2022, current account deficit widened, and we'll see that. We had a lot of importation. This is Bank of Uganda information, so I don't want to debate it so much. These are the realities that happened, but we're trying to use them to see what is the outlook like, which is why I want to rush very quickly. The external reserves deteriorated significantly over that period, and we're going to see that the external reserves, usually we compute them in terms of months of imports of goods and services for the next year. Say, if no dollar came in, for how many years can our reserves support our import bill? That's what we use. So if your import bill is 600 million per month, your reserves of 3.6 billion can support you for 6 months. If your shilling deteriorates, then those months reduce. If your reserves deteriorate, then those months reduce. So we are seeing a concern that from 4.9 months in May 2022 to 3.6 months in March. So in just a period of less than 1 year, we lost out almost a year of ability to do imports. Deterioration in our reserves. The month reduced by that magnitude. And so we have those threats of foreign exchange reserves that will include the cost of debt service, as we'll see, because our reserves are the ones that help us to pay debt, especially external debt. We're not using Sarah's collections to pay the dollars, but we use them to go and look for dollars and then pay. Now, when Sarah hasn't found the money, well, we have to use the reserves. So that's a big threat we are beginning to observe on our reserves. Soon we might get to 1 billion payments of reserves per year. Remember, our reserves are not that much in terms of the quantities, but also they will depend on how the economy performs, and this is the external sector, why I said events out there do determine our outlook so significantly. So I've put some a lot of information in that slide, but I'll just run through. The yellow bars are what our reserves in terms of actual millions of dollars, and you need to look on the right-hand side. The scale for the bars is on the right-hand side. So we're talking about 3.6 billion by the end of around February 2023. That's just about 2 months ago. The red line is giving us the real effective exchange rate. That's how competitive are we with our peers. When it goes down, you possibly are beginning to get some leverage, but you want to see where is that coming from, and we'll see that shortly. Exchange rate per period, end of period, and then the gross foreign exchange reserves in months of imports. Those are the numbers down there. The graph was literally static down there, so I put some numbers. As you can see, we have moved down to 3.6 months of imports, all the way from the 4.9 that we had in May 22. Those numbers going down is not a good sign for us. We need to get them back up. But sometimes nature just tries to solve itself out. We still borrow language from medical practitioners. If you have a diarrhea, don't immediately go to see the doctor. It is only if symptoms persist. So when I see the shilling losing value, I don't want to bother the governor. Only when symptoms persist. But I see so many people having a discussion. Our shilling is losing value. It is trying to secure the foreign exchange reserves. It's losing value, telling you guys don't import. You don't have sufficient reserves. Change that the season of importing the new car. You can do it in December. Change that the season of importing tiles from out there. You can use Goodwill tiles. I don't know how many of you are using them. So the shilling is trying to communicate, just like a diarrhea is saying, you ate bad food. I'm trying to sort it out as fast as I can. So please, only go if symptoms persist. The only thing doctors have not told us is how long is that? 2 days, 1 hour, 1 week. So seriously, depreciation of the shilling is sometimes a good thing. And I don't want to see the central bank fight it. Our shilling is overvalued and we cannot export. We can only import if the shilling is too strong. China keeps their shilling depreciated. So since our global outlook is tied with external conditions, you want to have, where should the shilling be? I can accommodate a shilling of 3,800, 3,900. Those are my personal calculations. I don't know what the central bank and government think. But for purposes of giving the economy a good outlook, I want some loss of value in the shilling. It will be good for us. That diarrhea must come and wash out our bad behavior. Of course, it will mean we need more from SARA to pay the debt. Now, those are the dynamics you want to calculate. But what is the most important thing is sustaining the economy in the outlook, because that will repay the debt. If SARA goes to chase these companies and they can't sell because they are collapsing, then that's not a good thing. Here we are, external sector. Again, the indicators, you look at our trade balance. It has reduced in the later years, partly because of the shilling losing value, and you guys also checking the seasons, saying if wheat is expensive, there is maize. There is local rice. And by default, as you eat less of wheat foods, I expect the price of rice to go up. So that's a normal economic business. In banking risk, we say, watch. Only respond if symptoms persist. So there was no need to ration rice. There's no need to ration some things. Just watch. So that is trying to save that the balance of the trade balance. We are beginning to import a little bit less in order to preserve our reserves, but also to say if we haven't found the dollars, we must not continue importing. Now, part of what is driving the trade balance is government imports. That's why I go back and say, if the future is to be brighter than it should be, remove the thing called the government fleet. Those vehicles. Don't just say no more importation. We already have a backlog of so many vehicles. Sell them. Sell them. If MTN staff go and work on their own, Stanbic Bank, they go and work on their own. Barclays, Uganda breweries. Why should the government official be entitled from his home to the workplace? Remove that, raise their salary. So those are the restructuring things we're looking for in government, and they are not yet coming through. Remove all those vehicle entitlements, we will save a lot that goes into the corruption in the garages, but that's a talk for another day. Because once you raise this guy's salary, it's going to be very frugal. He won't allow any corruption on his salary. But they'll allow corruption if government is servicing their car. There was a time I had a friend whose car was serviced when he was driving it. He only had to go to administration and management to discover your car was in the garage during that month. And the fellow was, now you remove all that. The car, the service, put it on the guy's salary, he lives a better life. So what's the basis for national focus? Again, we get into and say, are we getting it right as economists? When we tell SARA to collect 29 trillion, are we being realistic? Do we know where she picks the money from? So we are saying the January forecast, the economy will grow this year, 2022-23, by between 5 and 5.3. What is going to increase it? Oil sector investments. I come from the oil region. I'm still looking for those investments. They were supposed to drive this year's growth. It is ending next month. They are not there. So who plugged them in here as drivers of growth? And the very thing that are supposed to drive SARA's collections. Compliance can only be by the living. Dead companies don't comply. Neither do dying companies. So some of our assumptions and projections are not right. Economy will rebound about agricultural production due to good weather. Who told you? Thank God the weather has been good. But we didn't do much about it. It won't always be. And now if the weather is good, why do I spend billions chasing irrigation? Why don't I chase potholes in Kampala roads instead? Now, these are decisions of government that must speak to growth on an annual basis. So growth for this year, growth for next year can come out of improving the road infrastructure rather than irrigation. The government budget is coming up next month. You will see where the money is going. Is it speaking to growth areas growth of exports, we need to revive that. And you want to see who are my export destination countries. What is happening in those countries? All those delays otherwise are going to be bad to us, but also the global economy is not doing well as you may want to see. So the economic activity outlook, the economy is resilient, but continues to be tested by one adverse spillovers from the high global commodity prices. They are still out there. And also the production and trade tensions between, I call it West, but basically the US, and the East, basically China. That conversation of the BRICS plus, that conversation of tensions, whether the dollar or not the dollar, the ending of the war in Yemen is a good thing. But that means Saudi Arabia and Iran have agreed on something. And somebody was thriving on those two countries not agreeing, because they were selling weapons. So if that country selling weapons was partly a drive of Uganda's growth, and now it's no longer selling weapons, you need to think. That's what economics tells us. Look through the political economy and conclude on the economy. So the political economy events of that war ending means the dynamics that drive global growth are going to change. We already see some of the troops and soldiers who are fighting in Yemen were actually the rapid response thing. They are fighters. So when the Yemen war ended, they shifted their battlegrounds. They are now in Khartoum. Those dynamics you may not notice, but they might hit your economy hard. So let's discuss as we get to the conclusion, where do our exports go? These are countries you want to watch, because these are partly your drivers. We are discussing external because in Uganda, within domestic, we have significant challenges. Poverty levels, inequality levels are not going to allow us to use domestic demand to drive growth. It will sustain it, but not give it the new level. So we need to tap into the external sector. And as you can see, our biggest trading partner here is Kenya. And I've totaled this for the last 15 years to remove vibrations of, there was COVID, I don't know there was where. So let's see, who have we been dealing with over the last 15 years? We have sent to Kenya up to 5.7 or $5.8 billion worth of exports. That's a country you don't want to lose. So every time I hear Kenyans having some conversations that are not holy, I have a sleepless night. I almost develop a diarrhea. But I wait for symptoms to persist. The other one is Rwanda. The opening of that border, all other views aside, is a good thing. So Rwanda would be higher than that if it wasn't for the few years the border was closed. So that border needs to remain open. So look at Sudan, where the war is. So I'm already bothered. What is going to be the impact of that on Uganda's export? This is the outlook, by the way. That's what we're talking about. Democratic Republic of Congo. Every time I hear there are people fighting in the Kivu region, I get some goose pimples. And those symptoms seems to have persisted. So we need to refer them to a doctor. I just haven't found which doctor. It could be a witch doctor that I don't deal with. But that's a concern. That's a concern. Then South Sudan. So you can see that our biggest in the region are all troubled countries. The outlook is not very nice. Tanzania, less than $1 billion in 15 years. That's a country we import basically from Ethiopia. You can have a conversation. So for me, when you hear COMESA, COMESA is basically Kenya, Rwanda, Sudan, DRC, and South Sudan. The rest of the other countries, as you can see them on the extreme right, I don't want to know. It's peanuts out there. Destination outside Africa, India, and China. Remember, these are figures for 15 years. So all we have sent to India is almost 600 million in 15 years. All we have sent in China, less than 600 million in 15 years. But these are the global economic drivers. These are the global giants. So if you're not dealing with the big boys, who are you sitting in town with? You need to have a conversation with the Chinese. You need to have a conversation with the Indians. But by their strategy, those conversations won't yield much. Hong Kong, who knows Hong Kong? Who cares about it? But there it is. Some things are going through. So I want to sit with those guys and say, how can I support you to increase your sales in Hong Kong? Who are these traders? What are they taking there? That's the conversation you want to have, so that you don't just look at the outlook, you improve the outlook. Some guys talk about Europe. It's basically Italy, which is coffee. It is Netherlands, that is flowers. A little bit of Belgium, but those guys also are taking fish. So when I hear the fish stocks are down in Lake Victoria and elsewhere, I get a big concern. So I don't want to hear 18 products that government has listed in the NDP, I don't know, 2 or 3 or whichever others. I'm like, fish is what sells in Europe. Flowers is what sells in Europe, and coffee. So what do I need? Germany is the world's largest exporter of coffee. Since when? So where do they get their coffee? But you are not going to replace the Germans by bringing Pinetti here, who is Italian. Have a conversation with the Germans. Do some value chain linkages. Say, you guys, I know you export coffee, but you don't grow it. Let me grow and you export. Can we have a conversation? How do I finance my coffee? So I don't want to look for money for UCD. I don't have that money, as I'm going to show you shortly. But the Germans have the money. So can coffee in Uganda be financed by the Germans? Yes, it can happen. But you need some conversations. So the next time the president is leaving Uganda, I want him to land in Germany. Rabogo, my friend who is doing these export promotions, I want him to land. Don't go to have a conversation in the UK. They are our former colonials, but look, this is 15 years. 400 million. Anyway, they bring tourists. The tourist numbers are not here for some reason. They are not easy to find. I don't know why. Every time I discuss exports, tourism is not with me. No matter where I look. CFTA, I hear Africa, free continent. Which Africa are we talking about? I've already shown you my Africa is just the region. Don't tell me Nigeria, I don't know what, Cameroon. My Africa is this region. And I can reach all of them by bicycle, if that's what it will take. DRC, Rwanda, South Sudan, and Kenya. That is your Africa. Nigeria may be there, 200 million people. South Africa, trade-wise, I need to have a conversation here. Because there are infrastructure challenges. But what is Africa? It accounts for less than 3% of global trade. Why are dwarfs having a conversation among themselves? And yet the discussions about how to get mangoes from a tall tree. Go to Karamoja and look for those guys. So you want to have a conversation with those fellows who will grow your economy to improve your outlook. I think the rest is there. Lack of infrastructure. Trading in Africa is a nightmare. And now it's becoming a problem trading within the country itself. I will end with government debt. This conversation is our biggest nightmare. Corruption also drives government debt. When you want to steal public funds and they are not there, you convince government to borrow. And then you steal. That's a hypothesis I have found to be true. Because looking by the things we borrow for, I don't see them. We have borrowed and borrowed billions to fix infrastructure. It is now falling on us. So where did the money go? Certainly not in infrastructure. Somebody stole it. But that has been our borrowing. You cannot blame COVID and say because of COVID we borrowed. We began massive borrowing in 2013. That's when that line headed for the skies. I don't want to discuss what happened in 2013 because I know. But I don't want you to know just in case anything I say may be used against me. These are government stocks of bonds. We began the actual borrowing of government bonds, the treasury bills that's borrowing domestically for fiscal purposes around 2013. So that avenue opened up a window for government to borrow recklessly is the word. Because any other borrowing has conditionalities, but issuing a government bond has no conditionality. So we used that loose window to do excessive borrowing. And that is costing us, as you'll see. The blue bars is basically Bank of Uganda is trying to stabilize the shilling. And for that, we have to keep giving it money. Because they pay interest on those bonds. A 90-year bond is about 9%. So if you buy a 90-year bond for 3 months, 1 billion, the government must give you some 90 million as interest after 3 months to keep the stability, right? The boat calm. So this is where the challenges begin to come. Sustainability of the external debt should be based on export revenues. How much is SARA raising? And as you can see there, you look at the figures, the debt stock, the bus, and then the debt service, including IMF, by the way, which is going to trigger massively in 2025. Because when they lent us for COVID, they put a grace period. We're supposed to begin paying their money around 2025. It's going to be $300 million or more per year. That is still packed out there. It should be part of our outlook analysis. So when you look through this debt service, the percentage of URA revenues that we're using to pay the debt is growing. And that means SARA is not able to give back the taxpayers to improve their businesses in order to pay taxes for the next year. And that's our government budget that is being debated. Figures may have changed, but just slightly. It's possibly the last dots that have changed, the ones on the point something. The rest are more or less still the same. So basically, we are looking at a budget of URA must give us 29 trillion domestic revenue. Budget support will be 2.7 trillion, and then there's domestic financing, which is domestic borrowing, 2.7. But remember, if URA doesn't find the money, the pressure to do domestic borrowing increases. So if you know URA is not going to find the money, please don't put it in the budget in the first place. Budget and make your clothes according to the piece that you have. Don't design a fashion that is going to go beyond what is available. So realism here is very, very important for our outlook. Total revenues, total expenditure, we expect we will get 50.9. I really doubt we'll get there. So what Parliament should be doing right now is slashing the budget. All I hear is, I was underfunded, I need more money. Are we going to see a budget that goes beyond 50 trillion? My realistic view is we need a budget of 40. So we must cut out some things that we plan to do. The government fleet is my first target. Then you rationalize, but also civil service reform, send some people home, and then enhance those who are remaining. We are too many in the public sector. A country that can't facilitate interns, by the way, it's not payment of interns. It is facilitation. That's all they're asking for. But these are the people who run 40 to 70% of the health sector, especially at those critical stages of the referral level. And then they go into work. So you are not doing yourself a favor by denying payment and facilitation of those interns. But we are unable to do that because of some of these challenges. Look down there, number 14. Interest payment, 6.1 trillion is going to pay interest. And what is driving that interest is debt refinancing, which is number 10, rollover. It's also grown from 8 to 8.3 trillion. This is debt you have not resolved. So it continues to feed into your interest. But that forced restructuring is sending signals. So Fitch is saying Uganda downgraded. You are non-investment grade. That's where we are. So even as we promote ourselves as an investment destination country, people go and refer to Fitch. And Fitch rating is saying Uganda is non-investment grade. Maybe that's why the oil investments are not coming through. Doesn't matter. Oil is a good resource, but where it is a non-investment grade. So nobody is looking at Uganda as they stand out there. How do we change those? That's our outlook, really. We also have BOU capitalization, and also we have a debt on BOU to pay. We borrowed from our bank and we did not pay. It has caught up with us. Where is the money going? You look at those figures. Really, the big ones, human capital development is taking 27% of the budget. But even there, we are still giving 100 shillings per child in primary school. We are not paying the interns, we are not paying the doctors adequately, we are not paying the drugs. So even where the money has gone, we haven't fixed the problem. So what is our outlook like? These are conversations we really want to have, even as we ask SARA to raise more money. Governance and security is the next thing. We have a war in Congo, we have a war in securities here. Dealing with those issues is quite a nightmare of an issue. I wanted to look at legislation, oversight, and representation. This year, the figure may not have changed because that one you don't tamper with it. That's why the budget is 945.8 billion. Ladies and gentlemen, we have 365 days in a year. We are spending more than 2.5 billion per day on parliament. To do what? There are 529 members of parliament. We are almost spending 2 billion per year on each member of parliament. This is not their take home. But because the security around them, it exists because of them. So in financial accounting, in management accounting, we divide by the core business. It is legislation. Can we survive? Can we make mileage when we are spending 2.5 billion per day on parliament? Now I begin to understand why Amin educated me in very, very difficult circumstances. He had no parliament. So he put the money where it mattered most, in me. Amin didn't even have a vice president until in his last 2 years. You need to go to parliament and see the cabinet library where his cabinet used to sit. Room for 15 people. These are rationalizations we must speak to if our outlook is to change, and the Fitch will give us a better rating. So ladies and gentlemen, the last memos there are literally looking at debt refinancing, interest payment, external debt payment, domestic debt payment to BOU, domestic arrears. You add up all those, they are 18.5 trillion out of the 50.9.1 trillion. Are we investing where Sarah can pick the money? Compliance is a good thing. We should, but we can't comply because we are unable to. The spirit is willing, the body. I need to end this presentation by saying, where is Sarah picking the money? If you look at the second last column, number 1, number 2, number 3, and number 4, these are rank based. Who is giving us the bulk of the revenues? Contribution to revenues 21-22. 28% is from wholesale trade repair, motor vehicles. 22% is from manufacturing. 10% is from information and communication, financial services. 7%. So literally the first 3, 28 plus 22 plus 10 plus 7 plus 6, the first 5 are giving Sarah 75% of her revenues. That's where you need to be looking at. If you don't secure those, the rest are peanuts. You are really wanting to make a meal out of a squirrel. You can't. A meal for 2 people is okay. But a buffet? Jenna Angina told me you cannot make fish fillet out of mukene. So Sarah, as you chase all those fellows down, there is no fish fillet. You are going to find them, even when you harass them, they will give you 50K because their business turnover is even less than your threshold. You have set it up yourself. So you chase more and you catch nothing because everybody you catch is below the threshold. How do we improve our outlook in order for Sarah to catch something and for us to resolve these challenges? Ladies and gentlemen, the revenue effort has been going on. But as you can see, the last part was my interesting part. COVID hit us and we went down. We recovered in 2020, 2021. 2021, 22, we had a flat connection. Now, government out of its wisdom says, now, URA, you must give me 25 trillion. My presumption would be the flatness is going to continue. Or at least, even if it increases, 23 trillion would be more realistic. Let me be surprised by Sarah finding more. But 25 for this year, I would have given her 23. And now we have given her 29. We want to go back and say, are we being realistic? History is not on our side. Last, the orange line, whatever that is revenue to GDP. It hasn't changed much. This year, remember, we expect it to be 13.9. Last year, it was 13.4 or thereabout. Having moved from 10 7 years ago. So what do we anticipate? The upline there you see are NDP's expectations. So while we borrowed to finance the NDP, the expectation was by last year, tax to GDP would be 17%. Now, a lot of things are in there. Tax exemptions are in there. The growth that we expected that did not happen is in there. But financing of the NDP was based on that projection, that the revenues will be realized. The borrowing that financed the NDP was based on those projections. Now I'm asking my friends at NPA, who made those projections? There is a DPP's office in this country. There is a CID office in this country. We need prosecution that is based on professional errors. Because they are the ones breeding the other criminals. Why don't I end there? Thank you.
Thank you very much, Dr. Mhumuza, for this insightful presentation. Thank you. Yes. Thank you. And I didn't hear us clapping. Another round of applause for Dr. Mhumuza. Thank you. I think after Doctor has put this in perspective, then we now need to hear on what's next with the tax bills. Having had this economy's outlook, we're going to hear from John Jett and Ian. But just before they come up, I just wanted to briefly introduce them. Mr. John Jett Tusabe is a director of the tax practice at BDO, East Africa. I'll not add to his accolades because his profile should be up by now so that you can see and read everything about him. You're very welcome, sir. I hereby invite you to come take your seat so that you can take us through the next session. He will be handling this segment together with Ian Mutiwa. In this case, not as managing partner, but as head of the tax practice at Signum Advocates. And his profile will also be shared as well for you to learn more about him. Gentlemen, please have your seats and let's hear about the bills, keeping in mind that we just had this presentation from Dr. Mhumuza. Thank you.
Am I short enough? Hello, everyone. I'm happy to be here, and just as a disclaimer, before I go any further, I'm going to take you through key highlights on this tax amendments, but the tough questions, you know where to direct them. Within the booklet on your tables is a detailed analysis of the various changes as per the tax bills. Not to bore you, we are going to just give you a snapshot of some of those that stand out, those that have elicited debate amongst the public. Those are the ones that we are going to focus on. I don't know whether I should sit with Ian or I stand up. Ian? Okay. Ian is my advisor. We'll start with income tax. What stood out in the amendments? In the book, from the booklet, there are so many tax amendments for income tax, but we are picking out those that stand out. One is the overhaul of the capital gains tax regime and introduction of a 5% withholding tax on sale of assets. Within the bill, the capital gains tax regime was being changed from taxing the capital gains at 30% for individuals and between 0% to 40%, depending on the amount for individuals. Well, for companies, it is 30%. This amendment is one of those that caused a lot of public outcry, which the Deputy Speaker mentioned in the morning. And I can confirm that the committee confirmed when we had discussions with them on this issue that the Minister of Finance agreed to recall this amendment. So I will not go into the details of what it was saying, but it gives you a sense of what is government thinking around taxation of capital gains. Has there been a problem? Yes, there has been a problem with capital gains tax in Uganda. Why? One, the rates I've mentioned of 30% for companies on capital gains, not business profits, but capital gains, and 40% rate for an individual on a capital gain, those rates are too high. Our neighbors, Kenya, who are our big brothers in the region, they used to have 5% capital gains tax. They just increased it recently to 15% in 2021. And there was a lot of public outcry in Kenya in 2021 when they increased the rate from 5 to 15. But trust patriotic Ugandans, we have been keeping quiet with our 30% and 40%. That tells you that as a country, in terms of encouraging investment and building capital that drives business and job creation, it means that we are not doing quite well. So the policy issue there is that there was need to amend the capital gains tax regime in the country because it's not attractive for investment. However, the way it was designed created more problems than solutions, and that's why it was recalled. But we should expect probably in the next financial year a review of the capital gains tax regime. The good thing, we are privileged. This morning we have one of the chief economists in the Ministry of Finance who designs these policies. He will comment on it probably. So do not expect it in the laws that are going to be passed by Parliament because the Ministry of Finance recalled it. The other one is removal of initial allowance. The Deputy Speaker did a good job in talking about this in the morning. For those who missed it, initial allowance, if you invest plant and machinery outside a radius of 50 kilometers outside Kampala, you get a deduction of 50% of the cost of investment. That's a huge deduction, meaning that you wouldn't be paying corporation tax for a couple of years. Or if you invested in a building, except a commercial building, for example, a hotel, a hospital, those kinds of, or a warehouse, those kinds of buildings were attracting a 20% deduction, regardless of whether they are within Kampala or outside. So they were a bit generous on that one. It didn't matter where the building was. You'd get 20%. Those deductions are being removed, and the Deputy Speaker confirmed that they are likely to accept the proposal to remove them. However, the initial purpose of this initial allowance was to encourage investment upcountry. The question is, has that objective been met? The answer, I don't know. Then the other amendment is carry forward of losses to be capped at 50%. Again, the Deputy Speaker helped in the morning to clarify that as far as government is concerned, this is an area that they are willing to agree with the proposal to cap losses carried forward to 50%. What this means is that from your first year of operation, or from the first year you register with URA, you'll file your first year tax return. If you file losses 5 years consecutively, or it doesn't matter, by the 5th year, government is expecting that you shouldn't be having losses to carry forward. In other words, starting year 6, if you have unutilized losses, only 50% will be allowed in the following years from the 6th year. And government is trying to say that, look, we want money, we are willing to wait for you, but we won't wait more than 5 years. That's what they are saying. Although this might be reasonable for a business involved in simply trading, buying goods, selling services, this proposal would be okay. But there are certain sectors. For example, if someone is setting up a hydropower plant or is setting up a 5-star hotel, they cannot just build it. They first do a feasibility study. A feasibility study can take 1 year, 2 years. Remember, the company is already registered, incurring expenses. 2-3 years of construction. So in total, by the time construction ends and production starts, they are in the 4th year or 5th year. That means that for such an entity, if you expect them to utilize losses within 5 years, you're being unrealistic. So we need to have a further conversation with the policymakers and Parliament on this issue, probably within the next year, to revisit it, because the indication is that they have accepted it. To have exception for certain sectors that have a long gestation period. The technology is playing me, but it is playing me on your behalf. Then the other amendment is introduction of 5% tax on non-residents providing digital services to customers in Uganda. As you might be aware, the digitization has created a lot of opportunity for companies that sell services online or through digital networks or through the internet. However, our tax rules, which is not an issue, this is a global issue, not just for Uganda. Our tax rules tax you when you're physically present in the country. For you to do business, for Sarah and team to tax you, to ask you to get a tin, they'll find you at your office, at your shop, at your factory, and tell you you need to get a tin. Now, someone who is somewhere in the cloud, on the internet, there's no way of reaching out to them. So what this amendment is trying to say, look, we want to tax you on income you get from Uganda at 5%. For example, many of you here subscribe to Netflix. You pay on a monthly basis through your Visa accounts, for example. And URA has no idea about those payments. But they are making money from Uganda. What this law is saying, they are introducing this tax saying, Netflix, Amazon, Google, we want you to contribute to income tax in Uganda. This is in addition to already 18% VAT these players have been engaged to charge. And yesterday, in one of the presentations on television, Sarah indicated that she has been able to collect about 3.6 billion in VAT from these online players. So she's seeing an opportunity to collect more with the 5% as well. However, this tax is likely to be passed on to you, the consumers of these services. And we hope that they are not going to factor in the pricing of 5% in the next invoice come July 2023. For businesses that have been using services of Google, for example, and paying for advertisement of Facebook and paying non-resident players directly, you had an obligation to withhold 15% under the current law. But with this new amendment, the rate is dropping from 15 to 5%. So for businesses that have been complying, this is a good development, because you're going to be doing 5 instead of 15. There are certain practical aspects that come with this law. Who is required to report this tax? Is it the digital service provider? Is it the consumer of the service from a withholding perspective? The design, the way it is not requiring the digital providers to file returns to URA. It is expecting that there would be some sort of withholding by the payer. So there are some practical challenges there. If I'm paying for Netflix from my home, how does URA expect me to withhold 5% and remit it? That's not practical. So the ideal would have been to require these digital players to file income tax returns and simplify the process of registration and filing and payment to enable them easily comply. The other gap in the design is that whereas it is intended to be a withholding tax, Section 120 of the Income Tax Act, which obliges the payer to withhold, hasn't included this section that has been inserted. So it leaves a gap that if someone is not complying, URA cannot make them to take responsibility. Hopefully, we had discussions with the Committee of Parliament. Hopefully, within the amended laws, those aspects will be addressed so that the tax is effective. Collective investment schemes. Again, this is an area where there has been controversy from the public feedback, where government was proposing to tax 5% withholding tax on profits allocated to the investor if their investment is below 100 million, and then 15% if their investment is above 100 million. And as a country, we have a low savings base, and the Capital Markets Authority has highlighted collective investment schemes as a strategic pillar to mobilize Ugandans to save for investment as a group. So with the feedback that came from the public and the fund managers and the Capital Markets Authority, the Minister of Finance agreed to recall this proposal. So we don't expect it in the final laws that will be passed. However, it gives you an indication of the thinking of government around collective investment schemes. And our proposal is there is need to have an optimum tax structure once the majority of Ugandans have started to save, so that you don't chase them away, but also collect something small in the long run. ZEPRI, which is PTA Reinsurance Company. PTA Reinsurance Company has been included on the exemption list. For those who don't know PTA Reinsurance, it is Preferential Trade Area Reinsurance Company, which is a reinsurance company by COMESA countries. Does anyone know what COMESA stands for? Class. You are sleeping. There are going to be tests at the end of this. I don't know whether you got that note. So COMESA is the common market for Eastern and Southern Africa. So they set up this reinsurance company to make sure that they support the insurance sector and also retain some of the reinsurance premiums within the region. So this PTA Insurance is a key player in the insurance space. So previously, as per the current law, when an insurance company in Uganda pays reinsurance, they are supposed to deduct 10% withholding tax to a non-resident reinsurer. I don't know whether I need to, the expert on insurance is here. I don't want to appear like I'm the insurance expert, but probably later on in the Q&A, he will mention something about it. But in insurance, you cannot hold on certain policies all the risks alone. You are supposed to cede or to give away or to share some of the risks with somebody who is probably bigger than you. So that's where reinsurance comes in, but for someone to share in your risk, they have to share in your premium. So that means that when you're paying this party, say PTA Insurance, the law was saying that withhold 10% to the non-resident reinsurer. So there are 3 reinsurance companies that are exempted from 10%. That's Uganda Re. We have a Uganda Re reinsurance company. We have Africa Re and also the ZEP Re for withholding. However, ZEP Re is increasing its operations in Uganda. Uganda is the second largest market for PTA insurance. And to be able to increase their operations, they have requested the government of Uganda, please, apart from exempting us from withholding tax of 10%, we also have other income like investment. For example, if they invest in government securities that Dr. Muhumuza talked about, there's a 20% withholding tax. Now, with being included on the exemption list means, on top of being exempted from withholding tax on reinsurance premiums, they also be exempted from their investment income as well. So basically, they will not be paying any income tax in Uganda and VAT. Oops. Technology is not my best suit. Quickly, I will take you through VAT. These are the key ones. There are more details in the booklet. Accounting for VAT on supply of goods by auction. If you take a loan from a bank or from a money lender, you give your security, let's say a house, a building, or a car. If you default, the lender, say the financial institution, will get an auctioneer to sell that asset and recover their loan. The bill was proposing that this person who has been hired to auction should be the one to charge VAT at 18% on that transaction. That was creating a mismatch, because generally VAT is accounted for by the seller of the goods. The auctioneer is simply an agent. They are not the owner of the goods. So meaning that you're changing the way VAT mechanism works. For example, if the owner of the car, say it's a business, a car dealer, for example, they have mortgaged their assets, including cars. If you're selling these, when they are buying these cars, they paid VAT and they are claiming it as input. They are supposed to offset that input against the sales they make. So now if you transfer the sale to be made by the auctioneer instead of the owner, then you're distorting the VAT mechanism on top of making it difficult for financial institutions to recover their money. Yet, on the other hand, you're saying financial services are exempted from VAT. But when they try to recover, there is VAT. So, because of the challenges around that proposal, this is the other one that there's indication. I don't have a document, don't quote me. There's indication that this one was also recalled by the Minister of Finance, so it won't pass. Then the other amendment is limitation of input claimable to the business generating output tax. So if you are you're a supermarket and you have the commercial building, you own the commercial building where you operate from, and you have tenants on other sides of the building, that means that you're in the business of selling merchandise and at the same time in the business of renting out your property. Those are two business lines. So this amendment is saying, please, when you claim input, that is the VAT you incur on your expenses. If you are incurring materials to expand your building or to renovate the building, please do not mix that input with that of the supermarket. That's what this amendment is saying. This creates accounting problems, because if I have a building where I have my supermarket, I'm paying umeme. It lights the building for the tenants, it lights the supermarket. So how will I demarcate the input for those two business lines? The law is silent as to how the apportionment would be done. So it's going to create implementation challenges between taxpayers and URA, because even the URA return right now, as we speak, has not been adjusted, and no one knows how it's going to be operationalized for this amendment. So this amendment is coming from the perspective of a taxpayer who was able to be clever, whereby they were constructing a mall, but because URA was going to refuse the VAT they are incurring on construction since they have not yet opened, then they set up an advertising platform or structure whereby the advertising agency put up a billboard. You know, these billboards are not cheap. So they were earning income from the billboard as they were doing construction. So they were saying, I'm a VAT registered taxpayer. I'm entitled to all my VAT I incur. So please allow it. URA rejected it. And it went to court, and court said no, as per the law, the taxpayer is right to claim. So URA is coming to say, let's correct this. But it's going, in the process of trying to correct it, it's going to create other challenges for other taxpayers. Removal of requirement for URA to seek consent from taxable person on the utilization of tax credits. If your VAT credit exceeds 5 million, you can use it to offset VAT of the future or to offset tax in any other area, but with your consent. The URA is saying, well, if we see you have more than 5 million, but we see a withholding tax liability in the withholding tax ledger of 6 million. We don't want to wait for you, seek for your permission. We'll just utilize it to pay ourselves. As per current law, URA doesn't have that power. But now, they are being given the power to be allowed to utilize the credit that is sitting on your VAT account against any other tax liability. So when you see your VAT credit disappearing, just know the consent. This law is now coming into play. The other amendments is on the exemptions. Within the VAT Act, diapers are listed as exempted supplies, meaning that diapers for children, that is Pampers for children, they are exempt as per the current law. They are not subject to 18% VAT. However, the law is being amended to, instead of saying diapers, they are saying adult diapers. What that means is that only adult diapers will be exempted. So that means that I don't know what percentage of adults need this exemption. They would have simply said everything is taxable instead of but this is trying to make you do some Dr. Muhumuza mentioned in the morning that our dependency ratio is very high, that we need to manage it. Probably this is one of the ways to manage, to do family planning, because if you are planning to have 3 more children, you are now thinking of an additional 18% on Pampers. The supply of concentrates and seed cake is exempt. That is for the agricultural sector. This has been a challenge. It is being addressed. The removal of the supply of all production inputs into iron ore smelting into billets, they are no longer exempted. Then the supply of production inputs for processing hides and skins into finished leather products are no longer exempted as well. So this is to reduce the number of exemptions to drive the tax to GDP ratio we are talking about. Please allow me invite the only land member standing before you this side. Ian, you're most welcome.
Thank you, John Jett. I will not use the technology because I'm land but not in technology. I'll take you through the tax procedure code, and there are 4 important items that you need to address your mind to as taxpayers. The most important one is the waive of penalty and principal tax. If you look at the booklets, they are more in detail, so I will not go through the flipping. The law is proposing that if you pay your penalty and principal tax, if you pay your principal tax outstanding by 31st of December 2023, the interest and any other penalties will be waived. This is again in the drive to make sure that you can pay as much tax and URA can collect as much as they can. So if you have any outstanding tax and you feel like you want to pay it, if you pay it by 31st of December 2023, the interest and penalty, the law says it shall be waived. So as the lawyers, we know shall means it's mandatory. They cannot even question, they just waive that particular payment. But we know that URA usually likes to audit to make sure, is it the right tax? Is it the right? So those may come in. And another clarification that has come into play in the bills is before your principal tax or the aggregate of your principal tax and your interest and penalties could not be beyond. So if you have, say, principal tax of 20 million and you have penalties of 40 million, they will cap them at 20 million. So the penalties and interest could not exceed principal tax. But the question that the lawyers had is, what happens to the balance? So the law has come in to say that the balance, where it exceeds, that balance is waived. So this is to make sure that the ledger is reconciled, because when you go to the URA and you say that interest should be waived, they don't have an enabling law to waive it, to reconcile your ledger. The law comes in to bring that into perspective. The law also is coming in to criminalize remove of digital stamps or forging digital stamps. I'm sure many of us have bought drinks or things from a supermarket. There's that seal that they have. It's a digital stamp. And the law comes in to say, if you tamper with that seal, we have a 10-year imprisonment or 30 million shillings fine. We are seeing the tax law increasingly becoming more criminal. So there are going to be probably more prosecutions being done for tax evasion. So we need to be very careful as we rely on as we do our taxes, because criminal penalties are going to come in. The Tax Procedure Code also has an interesting provision where if the URA asks for information during an assessment or an audit, you don't provide that information, you cannot rely on that information, maybe a tax appeals tribunal or the High Court or alternative dispute resolution stages. As lawyers, that becomes contrary to natural justice. One is allowed a fair hearing, and I'm sure provision will not stand the test of time. And if it does, I'm sure we shall be up in arms in court to make sure that is repealed. So that's a provision to make sure that you give them information when they request it. But I'm almost certain to not go beyond that. One of the most interesting ones is ADR resolutions, regulations. These have already been passed into law. There was already a law that allows for alternative dispute resolution, and now the regulations are out. This ADR process is not compulsory. You can opt out of it. You're given 7 days after a tax decision to apply for alternative dispute resolution, but you don't have to. The danger with this particular regulation is that if you apply for alternative dispute regulations and then the time for appealing to tax appeals runs out, you cannot hold that as an excuse. So they're more or less redundant, in my opinion, because they don't stop the time from running, but it's a mechanism that URA is using to make sure that they give you all opportunity to exhaust your interaction with them and the commissioner. So in my opinion, the ADR regulations, they are there, but I think they'll be redundant in as far as they don't stop any other processes, and you can opt out of alternative dispute resolution. Maybe what will concern the multinationals now would be the Mutual Administrative Assistance Law or Bill. This has not been talked about, yet it's one of the most important. What this bill does, it has codified what the OECD, or Organization of Economic Cooperation and Development, have been discussing over years. Most multinationals hide behind iron curtains of countries, hide behind regulations of countries, not to disclose their tax affairs in those countries. Unfortunately for the MNOs is that the OECD SAT, they passed guidelines on how to share information between the different revenue authorities, and Uganda is now domesticating that particular provision. That means that the URA can share information with as many countries as have signed on to that particular guidelines or the OECD guidelines. And that means that if the UK or India or Hong Kong came and wanted to know tax affairs of a certain company that's resident in Hong Kong or UK or Netherlands, they can now get it from the URA without your consent. They go further to even look at your bank details. They can go to financial institutions and get that information and share it with the relevant revenue authorities. Conversely, the URA can also ask for that information from those countries where most of these taxpayers are resident. So if you are a British MNO or Hong Kong or China or in India, the URA has a right to say, can we have the tax information for this particular company? And the revenue authority of that particular country has a mandate, if it has signed on to the guidelines and has domesticated, to share that information with the URA. So this comes into to prevent multi-jurisdictional tax planning, or making sure that people stop forum shopping for different jurisdictions to reduce their tax compliance with the URA. In short, those are the bills that I'm presenting on. Tax procedure code, I've given you what there is, but the most important for this room is that if you have a tax liability that you feel you need to take the burden off, the law is saying by 31st December, pay that principal tax, and the interest and penalties shall be waived by the commissioner. Thank you very much.
Thank you, Ian and Jet. That's a very elaborate and detailed presentation, yeah? They've given us a practical feel, yeah? They're relating it to our businesses. I've explained it in detail. That's very good. And ladies and gentlemen, let's give another round of applause to Jet and Ian. Done a very wonderful job. Yeah, for our dear online audience, please continue generating the questions. Our Q&A is up and running. We're taking note of the questions, and we have a Q&A segment that we shall address each of those. Ladies and gentlemen, our next segment is a panel discussion. We're going to have panelists from varied sectors, yeah, to try to give a feel to these bills. How do they relate to the businesses in the industry, in the sectors, but globally also and nationally as a country, yeah? So we get to have some practical examples and experiences. It will be a panel of four, and I'll be introducing each of the panelists who will be taking their seats up front here. Yes, thank you. Our panelists will be taking their seats up front here, and it will be a discussion. So our very panelist that we're introducing is Mr. Gerard Namona. Mr. Gerard Namona is coming from the Ministry of Finance, particularly the Tax Policy Department. These are the people that generate these bills. So it'd be very interesting to learn from him what was the tax policy perspective behind each of these bills, but also give us a feeling as the ministry, where they're going with these bills in here. So Mr. Gerard Namona, I kindly invite you to take up a seat. Thank you. That's Mr. Gerard Namona from the Ministry of Finance, Tax Policy Perspective. Then our next panelist is Mr. Aaron Akampa. Mr. Aaron Akampa comes from Stanbic. Stanbic, that's the biggest bank we have in Uganda. He comes from the Enterprise Banking Department, yeah? So we need to get a feel of the financial institution sector. This is a very, very candid sector, yeah, because it has a ripple effect to all taxpayers. So Aaron will be telling us how these amendments will be affecting them as a bank, but broadly them as the sector. Yeah, so Mr. Aaron, you're very welcome. Our other panelists will be the name is very foreign, Mr. Tete Aitevi. Mr. Tete Aitevi, I hope I pronounced it rightly. Thank you. Yeah, Mr. Tete Aitevi is the CEO of Prudential Uganda. Yeah, I guess very many of us are customers of Prudential Insurance. But yeah, Mr. Tete will also be giving us a feel of the insurance sector. Yeah, them as an industry. Yeah, how do these bills affect them? What are they looking out for? And also, are they shifting this ripple effect to we, their customers? Be very interesting to hear from him as well. Yes, those will be three of our panelists. Yes, ladies and gentlemen, also to give perspective to the Revenue Authority, we have another representative of the Revenue Authority, Mr. Brian, from the tax policy perspective. Sorry, the tax business policy unit of the URA, very, very fundamental unit of the URA as well. So he'll also be taking a seat up front here. Then my colleague Rachel is going to moderate this session. So feel free, if any of you has any particular questions to any of the sectors up front here, kindly take note and we're going to pick up on each of those. Thank you, and over to you, Rachel.
Okay. Thank you, Edwin. This is for the sake of feeling at the panel. I'm not a panelist, but I'm sitting with our panelists today so that we can just have a discussion with you. So I think I'll start with my right. That's Mr. Tete from the insurance space. And the question that I'm directing to him is from the digital services taxation. Now we are aware that Prudential and many other businesses, insurance companies, financial institutions have already embraced digital services, maybe through applications or other modes of utilization of these services. So the question is the insurance industry ready for this taxation regime that has come up?
Thank you very much, Rachel. I didn't expect to be the first, seeing how foreign I am. But I think from an insurance perspective, you look at investments into digital services as a key thing for us. Insurance runs on a policy admin platform, which is expensive to administer. The key thing about this is the fact that if you want to have a very strong policy admin system that is able to meet the demands of current customers and where we are going as an industry, considering the fact that we only have a 0.1%, 1%, penetration of insurance in the market, you need to invest heavily in the digital space. You want to get the right platforms. Unfortunately, you do not have service providers in Uganda who can meet the kind of specifications and requirements that we have. Now, what it means is that you definitely need to look for service providers who are external. And obviously, if the charges are going to go up, then it's going to cost a lot in terms of how we run our businesses. But beyond this, the cloud hosting component is a key thing for us now. You definitely would have companies which will leverage on the fact that they are part of a bigger group. And this group leverages on the fact that these platforms run on cloud platforms. The cost savings in that regard is you have a number of companies in the group would utilize the same service, and it's cheaper for these groups to invest in other countries, and Uganda is an example. Once you start taxing these service providers from outside who are providing these services, you limit our ability to do more in that space. Cloud hosting is key because AI is important now. We want to go forward in how we deliver service to our customers, how we penetrate the market. These key components cannot be avoided. So we can tell where the headwinds are likely to come from, but it's too early to determine what the impact. Immediately, you can tell where the challenges would be and what we need to look out for. So it's the worrying. The other side is more encouraging, but this is the more worrying part of the bill for us. But it's too early to do.
Okay, thank you, Tete, for that. Yes, over to you, Aaron. I'll go. I know that this is one of the clauses that they probably say is we hear has been withdrawn, but also tax can be like a rainbow, it could come and then come back. We don't know if it could actually be back. So we still think that it's worthy for us to have a discussion on it. I'll go straight to the VAT aspect we discussed on the aspect of the auctioneer and then having a VAT twofold kind of tax that is going to be both on the goods and then on the auctioneer himself. So in this, how practical do you think this is going to be for like the financial institutions to implement it, considering that you're both the auctioneers and then the goods auctioned are also your goods because it's mortgage property that is being auctioned. Thank you.
Thank you. I think hearing that this particular amendment is likely not to come through, I think gives me a bit more comfort, at least temporary relief. First and foremost, I believe that particular amendment was changing application of VAT, right? From your typical goods and services to the method of disposal, which ideally shouldn't be the case. If you are to think about it, we as financial institutions have two options. Either you're doing a sale by treaty, in which case you're inviting a person who is in default to potentially get a buyer for their property, agree on a sale price. Any funds that are over and above that sale price, they can continue to utilize. The other option, which is more used, is the sale by auction. Now, if we are to say we're transferring the VAT element to the auctioneer, first of all, that a mere bridge. Typically, the banks are the ones that are making the sale. If financial services are VAT exempt, what are we doing? Then think about the flip side of your other companies outside of financial institutions, your small and medium-sized businesses who are not even registered for VAT. Why would they go to auctioneers? Would almost essentially shut these auction houses down, because again, there's no incentive. I think it's for me, hearing that it's being scrapped gives me a lot of comfort. This is not. I think we're trying to increase tax compliance. We're trying to. This particular one is not the way.
Thank you, Aaron. Thank you for that. Yes, over to you, Gerald. This is from a tax policy perspective. So as we've heard from our presenters today, they've also told us about this convention that we are yet to implement in Uganda. So just from a tax policy perspective, what background is behind this, and how should taxpayers get ready for this, or even the tax authority?
Thank you very much, moderator. I suppose you're talking about the bill which is trying to domesticate the automatic exchange of information.
Yes, that's the one.
International framework. The background is that some years ago, government of Uganda assented to what is called the Convention for Mutual Administrative Assistance on tax matters. And that framework provides for a broad range of things which basically facilitate tax administrations around the world. And it's a good thing in the sense that with the increased globalization, it's important that tax administrations have a framework for coordinating their efforts to raise revenue in the different jurisdictions. Pursuant to that bill, there was an idea that there should be information exchange in order to facilitate tax administration. And that is what led to development of another convention, a multilateral convention, which facilitates automatic exchange of information. Uganda again assented to that bill, and it's necessary that the domestic law
is amended to anchor that multilateral framework for implementation. That is what we are trying to do in that bill. What will happen is that financial institutions, once the bill is in place, once it's enacted and it becomes an act of parliament, financial institutions will be required to collect information on non-residents and share it with the countries where those non-residents are tax resident. In exchange, it is expected that those jurisdictions will also collect information on Ugandans in their jurisdiction and share it with Uganda, of course, through URA. The idea is that once this has got global acceptance, there is very little room for avoidance, and that should bring benefits for all participating jurisdictions.
Okay, thank you. I had this last part of avoidance, and I thought about how people go, sometimes to other jurisdictions, you start businesses, or you leave those jurisdictions without paying taxes. And now what's going to happen is that tax authorities all over, because please note that over 147 countries have already ratified this convention. So you cannot avoid some of these things. So imagine another jurisdiction quickly just asking our tax authority, please tell Stanbic Bank to give us the account details of so and so. Before you know it, they know your entire status of funds. So Aaron, of course I'm coming to you considering that you're representing the financial institution space. Having received a request from the tax authority, for instance, what do you need as a financial institution to actually provide that information? Bearing in mind that as your clients, as your customers, there's a fiduciary duty. I know this is now subject to law, but what do you expect to see? For instance, if it were like something to do with court, I would expect a court order. So for you, what would you expect to see to comply so we do not have this being abused?
That's a loaded question. We, as Stanbic Bank, are probably one of the most, if not the most tax compliant organization in this country. So obviously we have to comply, but I guess it's back to the procedure. Globally accepted. We are in 24 countries on this continent. My guess, if 147 countries have signed on, most of these, most of our sisters and brothers across the continent are probably already signed on. The procedure must be agreed upon, must be tabled. I think we must. There's always a cost and a risk in verification of information coming through. If we don't treat this the way you treat, say, an agent notice or a Ganshi order, it is going to be very, very difficult because my hope is requests are not coming in from everywhere. There's a centralized desk within the authority. We have a party in here, and I think very importantly is the existing businesses, what rights within the documentation that's been signed have been afforded to us to share this information. That's something for our legal teams to review. And so I think for us to be able to adequately comply, we need to sit down as the financial institutions, probably through Uganda Bankers Association, and with URA, agree what's the extent of the damage, what type of information is required, what's the format through which this information will be shared, how do we guarantee data protection for the information that's being shared, because this is highly confidential information. How do we ensure that it's going to the right point of the right recipients? Because if an international incident occurs, our brand, which is our principal value, trust is the business that we're in, will be compromised. So there is a lot of work that we need to do prior to the compliance, and I think that's if this is being signed into law, probably need some time to just hash out those details. That's where I stand on this.
Okay, thank you, Aaron. So Gerald, back to you. Just maybe this last one before I release you. Don't you think that this is going to discourage investment in one way or another? What does this mean for investment generally in the country?
Thank you, moderator. In my view, I don't think that this is going to discourage investment because there's traction on implementation of this framework across the world. So if you don't want to comply here, wherever you're going to run, you're likely that you'll be caught there. So whichever way, I think compliance is the better thing to do. And so having said that, I really don't think that this is going to be a constraint to investors.
Okay, thank you. I think I'll just come back to Tete, just right here. So as one of the amendments still is the exemption of ZEPRI's income tax, VAT. It's already exempted on WHT, that's withholding tax. What does this mean for the insurance space? Do you expect that you're going to have probably a reduction on the premiums? What outlook does this bring to the insurance space?
Thank you. I think that it's a brilliant move by the legislators to try to reduce the impact on ZEPRI. Now, if you look at the demographics of Uganda, 47 million people, 17 million probably in some form of employment, informal, under 2 million in the formal sector, insurance penetration just 1%, health coverage just over probably 500,000 people. You need a lot of investment in this area to try to grow. Insurance companies can either increase their capital to try to invest a little more or pass this on to reinsurers. So whatever we'll do to increase the capacity of the reinsurers to come in and support, for me, is a brilliant idea. What Dr. Muhumuza spoke about in terms of improving doing business in the commercial space, I see this supporting it as well. So in my opinion, that's a brilliant move. If we get ZEPRI to look more into this space, be more favorable because Uganda is in the commercial space, and give us an opportunity to pass a lot more of our risk burden onto them, which gives us an expanded capacity to do a lot more in the insurance space, I think is a brilliant idea. And that was the reference I was making, that I see some parts of this bill as very positive and very helpful, though I'm a bit uncomfortable about the data charges. But I also see some very positive news on the collective investment part. I'm glad that that bill part has been recalled. If you look at these numbers, there's so much we can do in the collective investment space in pooling resources together. And that's important for development. You can only do more when people put a lot more money together. Insurance companies help pull that together and invest in the market. Collective investment schemes do something else in that same regard on a different level. And anything that encourages people to put money together without being taxed so much is a plus to the economy. So from my opinion, I think that these last 2 points are very positive moves by the ministry to put into the bill.
Thank you, Tete. So Gerald, just one last one that we're a bit curious about. This is under the Tax Procedure Code Bill. So of course, there's this good incentive that has been proposed where the commissioner can waive interest and penalties once the taxpayer clears their principal tax by the 31st of December. 2 questions. One, are there going to be any regulations as to how this will be implemented? But secondly, so that we don't have uncertainty. But secondly, what happens to tax that is collected under agency notices, third-party agency notices? Because this is a bit common, so we are kind of wondering where this would lead to.
Again, thank you very much. My colleague from the Revenue Authority might be the most competent to respond to this one, but I'll give my take. When we crafted that policy and provision, our sense was that a voluntary payment was clear. To the extent that there is still uncertainty, I think we'll have a conversation with URA and see how we can further clarify it. On whether somebody who pays through an agency notice might actually benefit. Again, my colleague will come in on that one. My sense is that it must be voluntary. And normally the agency notices, by the time you reach that step of enforcement, as CDT mentioned earlier, you would have gone through certain steps across the enforcement, the compliance spectrum. And to the extent that you've been forced to pay the tax through an agency notice, you might find that it may be difficult. But again, Brian will perhaps expound on that point. Maybe, moderator, I just wanted to make one comment on the collective investment scheme. I think it's very important that we get used to, first of all, interrogating the provisions as we propose them before we respond. You might find that that proposal had certain good things in it. It may not necessarily have been bad, especially when you start from the perspective of where we are today. There is a provision dealing with collective investment schemes, and it has certain uncertainties around it. One of the good things in that our proposal was to clarify those uncertainties, which would be good for the industry. But also, it wasn't our intention that people who save through one scheme get an exemption and all other schemes do not. I think it's very important that we recognize one of the main challenges we have in our tax system is inequity, addressing inequities within the tax system, wherever they are. And that is one of the things which are high priority in the design of some of these policy interventions which we propose. I'll leave it there for now.
Okay, thank you. Of course, last but not least, the tax authority, the URA. Brian, we are seeing in that state. So we just have, and maybe as Gerald said, perhaps you'll expound on that, but I'll still state your question just before that so that you can respond at once. So your question specifically along the lines of losses being carried forward. Okay, so we are now seeing that there is a proposal to make sure that after 5 years, only 50% of those losses can be carried forward. And we know that, of course, I don't know if this was from the perspective of some people will overstate their losses even when they're not there. But then we also know that there are some businesses that genuinely have an incubation period that exceeds 5 years, okay? Maybe think of like construction spaces or any kind of business that may go beyond the 5 years. How practical is this for them? What does this mean for them? Because they'll genuinely have made losses by then. So what does this mean for them?
Thank you, moderator. Let me comment on the question on agency notices.
What was the first question before that?
The first one was just to expound on what we had asked Gerald.
Oh, on
Yeah.
the voluntary disclosure.
Yes, disclosure.
Okay. The voluntary disclosure that is being proposed is a type of amnesty that URA has done in the past. About 8 or 7 years ago, URA gave amnesty to all those people who wanted to come forward and make clean their declarations to URA. The purpose for this is that to give people a chance to do a self-health check. Once you've done the self-health check, you come to URA and make a declaration. In this declaration, you have to be willing, of course, to make a payment of any outstanding taxes that you had not disclosed in the past. This worked 8 years ago. URA collected quite a lot of money on this. And we realized that people do make mistakes, but are not given a chance to rectify them even after they have noticed the mistake. So the purpose of this is to get all of us to come and do a health check. And if you're wanting, you make a payment and the penalties and interest are waived. Giving clarity on this, URA would normally do a practice note or public notices, giving guidance to the public on the steps that they need to take to ensure that they do a full and proper disclosure to make the amnesty work. The issue of agency notices and them being used to cover the amnesty period. The amnesty period is for those who come with clean hands. Fellow lawyer here would know that he who comes to Equity must come with clean hands. We will not use money that has been collected forcefully because that is usually collected from people that are not compliant. So you will not use that as a way to become clean. If we have to force you to pay, then that will not count. The issue of losses carried forward. As our Deputy Speaker said, we have very many companies that are perceived to be large and profitable entities. And we have noted with concern that some of them have had carry forward losses for periods in excess of 10 years. Of course, that is very concerning for the Revenue Authority and for the lawyer and for the legal teams at hand. How do you do business for 10 years to remain in a loss? I don't think anyone goes into business to be making losses. So the proposal has been made on numerous occasions to try and get taxpayers to make proper and clean declarations. There are companies that indeed might rightfully make losses that will exceed the 5-year period. But ask yourself a question. As a business person, would you want to engage in businesses for which you foresee losses for a period of more than 5 years? The answer to that is not clear. I'm sure we don't want to make losses. But I think some of those conditions might be looked into. And let's wait and see how the proposal is fine-tuned. There might be exceptions to the general rule, and those exceptions might consider companies with large incubation periods. And let's just wait. I think after this week, we should have a clear guideline on where this is going. Thank you.
Thank you, Brian. So just one last question from your side. The issue of ADR, that's Alternative Dispute Resolution. We also know that the regulations have already been passed into law. However, we know that there's an issue around the timelines. So the timelines that one is required to lodge an application in the Tax Appeals Tribunal has not been waived, okay? And yet, ADR has also been put in place to say that if you have an issue, first discuss, negotiate, have a deliberation with the tax authority before you can probably proceed to the tribunal. So our question is, how do we reconcile the two? Isn't there a chance that the ADR might become unappealing to the taxpayer? Especially if I know that if I'm going to take that time, it's going to take so much of my time, and yet I would rather go to the tax appeals. After all, they'll send me for a 60-day mediation, which will do the same thing almost. So how do we reconcile that?
Thank you for that. ADR, as we all know, is alternative dispute resolution. Lawyers will tell you that litigation is expensive. We have come up with an ADR regulation to, one, make your cost of being compliant less, and also to reduce on the backlog of cases in court. ADR is voluntary, and the time frames within which you're supposed to make an appeal to the commissioner for ADR is 7 days. Now, I think if Council Ian can guide, I think the duration for going to TAT is 30 days. Now, the ADR regulations have been made in such a way that you resolve any dispute with the commissioner within those 30 days. And also, it doesn't negate or take away your right to go to TAT. So what a taxpayer can do to be on the safe side is you can lodge an appeal in TAT and at the same time write to the commissioner within 7 days of getting your objection decision to have the dispute resolved amicably and cheaper with the commissioner.
Okay, thank you, Brian. And this has brought our session to an end. But just before we wrap up, I'll just take concluding remarks from each of our panelists just before we close this. I'll start with Brian this time.
Thank you very much. I'd just like to re-echo two things. One, compliance. We are in a time when our country needs the most money. I think it is comfortable to say that Uganda is broke. So, as compliant taxpayers, I'd like you to encourage your taxpayers to make as honest and truthful declarations to URA and pay the correct taxes on time. The benefit of doing this is you have an amicable relationship with the Uganda Revenue Authority after you've made proper declarations. It is very saddening when you hear that businesses are being closed due to enforcement action caused by non-compliance. So my one take is be as compliant as you can, take advantage of the provisions in the law to your benefit without breaking it, and we should have an amicable relationship. And secondly, and lastly, let us utilize the alternative dispute resolution mechanisms to reduce on the court's burden. But also it makes it easier to resolve problems and make your compliance case heard by the Uganda Revenue Authority. Once you go to court, this is usually a lengthy and expensive process. ADR shortens the period to resolve disputes, and we are able to work together amicably after that is done. Thank you for listening to me.
Thank you. Gerald, over to you. Any concluding remarks?
Thank you, moderator. For the avoidance of doubt, we are not broke. We are just trying to raise revenue in very difficult circumstances. Raise revenue, but raise it in such a manner that we still are able to thrive with our livelihood and carry on our lives in the best way possible. Having said that, I would like to implore the audience that the Minister of Finance is very open to discussing tax reform. Feel free. The process is very transparent. We engage in debate in each of the measures which we introduce. In case you are unhappy with anything, or even when you are happy, please write us a note, give us a call, engage. We are open to improving our tax system. As Dr. Mooms pointed out, you could see that we could do more on the tax effort. the trouble with this thing called taxation is that wherever you want to tax somebody, they point to the next person. Can you touch that one? Eventually, you are going to have to resolve that conundrum and tax someone, somewhere, somehow. Otherwise, we thank you very much for this engagement, especially the timing. The timing is very good before the bills actually come low. This is the first time I'm seeing this kind of engagement. Many times the debates come much, much later. And it's very difficult to change anything until maybe after a year. This is very good. Carry on.
Thank you very much, Gerald, for that. Aaron?
Thank you. I think first of all, the work that the Revenue Authority does is very difficult. I think sometimes we get used to throwing punches at the authority, but the work that you do in a society that is not very motivated to be tax compliant is very, very difficult. So first and foremost, it's an appreciation on the efforts. I want to thank BDO and Sigma for the invitation to be on the panel, on a distinguished panel with experts in their respective fields. Again, to the previous speaker's point, this comes at a time where the inputs that are coming from these sessions can actually have meaningful impact. There is something that the Deputy Speaker mentioned around agent banking tax, the 15% that's likely to be introduced. I think for one, that might be a bit too soon along that journey. I think it's only 3 years. Agency banking has only just barely started. I think that may cause financial institutions will tell you there's a massive struggle within that particular space, and yet a lot of traffic is going that direction. You may need to give it a bit more time before you introduce taxes in that element. But a lot has already been discussed. I don't want to get back into that. For me, it's an appreciation for these dialogues. We need more of them. Perhaps the next phase is the Muntu Wawansi as well. How do we bring the Muntu Wawansi into this dialogue for someone who is running with an SME franchise? We don't give out debt without a tax clearance certificate. The sheer number of businesses that walk away from business loans that they absolutely need because they don't want to go through the process of obtaining that clearance certificate is a lot, and that itself has its own challenges. So these are things that we really, really need to think about. How do we do inclusive taxation that is not killing the small business owner? But otherwise, thank you all. I appreciate the time.
Thank you, Aaron. And finally, Tete.
You called us experts, but we're still learning. 22 years in the industry, I'm still learning. One of the things I would say is that I'm very appreciative of, this is the second tax breakfast I've been to. And a couple of things that struck me was the response of the ministry and URA to tax issues in the country, and the frequency of iteration and the discussion around tax issues to try to respond to issues of equity and co on the market. And I find that very commendable. Uganda is the first country I've seen do this regularly and very often, taking feedback from the market, making changes and coming back again to launch them to the public. So I'll send my commendations to you. Please, let's keep up this good work. I didn't hear Sarah mentioning some look at sectorial, issues, and I think that in some of the time frames when businesses break even and co should be looked at in a sectorial manner, because there's some industries that have a very long-term view, which the investors are willing to invest for a significant period of time before this business break even, if the profits are going to be significant. And I think that that view must be captured, in the deliberations. But overall, BDO Signal, thank you very much. You are in the ministry. Thank you very much. Keep up the good work. Thank you.
Okay, thank you, Tete. Thank you very much, panelists. And my name is Rachel Kebabazi, an advocate practicing with Signum Advocates that is moderating this session. So thank you. But just before you take your seats, we are just going to have a Q&A session that, of course, entails the panel and our speakers. I'll just invite Dr. Muhumuza to just come and take the seat so that we can have the Q&A. And my colleague Edwin will moderate this session. Ian and John Jett should also be somewhere close by. So the entire panel of speakers and the panelists. Thank you. Yeah, so if you have questions, I'm going to move around. Please feel free to send them. And those that are online, we've been receiving them. Thank you. Dr. Muhumuza. You want to stay there? Oh, fine. Thank you.
All right. Thank you, Rachel. And let's give a very big round of applause to Rachel for moderating the session. But a bigger one to our panelists, yeah, because we all agree, yeah, they've given us very practical, yeah, a practical feel to these bills, yeah, particularly in their sectors, in their industries. That's good, and we all agree, yeah, tax is not exhaustive. We can't exhaust every client's query up here, but the BDO team and the Signum team, yeah, I'll just ask my colleagues, BDO and Signum, just raise up your hand and wave. Yeah, feel free to engage any of our colleagues on any of your issues. Yeah, we shall address it deeper and much more clear. We couldn't exhaust it. Then my colleague Rachel is going to be moving around the room. So any of our colleagues, any of our clients in here, if you have a query, feel free to raise it with Rachel. You will be given a chance to raise it to any of the participants. There is Ian and Jet as well, so feel free to direct it to anyone. But also our online audience, we haven't forgotten you, yeah, and I think it's prudent we start with you, yeah. So on our online audience, we've had a couple of our clients who have shared the sentiments and the queries, and I'll start with my very good friend Lincoln Kasirie of Uganda, yeah, very passionate tax practitioner as well. But Lincoln asks a very important question, and it's to the URA. Sarah is not here, but my friend Brian is here. So Brian, this is directed to you. What amounts to government in the CDT's view? Because IFRIS limits it to only government ministries, excluding departments and agencies, including URA. So Lincoln needs a clarity from the URA. What do you term as government? What's your understanding of government?
Thank you, Lincoln. What constitutes government is ministries, departments, and agencies. And ministries, I think we are all aware of who a ministry is. Then we have departments under the different ministries. Then you have agencies such as Uganda Revenue Authority, UNRA, all those authorities that basically constitute government. And one critical thing to note, anyone that is funded through the consolidated fund, that is one of the key criteria of knowing whether you are government. If your money has come from the consolidated fund for your activities and go through the budget process, you are most likely government.
Thank you, Brian. I think that's very clear enough. And to we, the consultants, to we, the lawyers, let's take note of that. Yeah, we advise in this client, so you could get a client in that space. So just to advise the client and to confirm to them that it does.
Edwin, there's a question here. I don't know if you want to take this or we let you do those first.
No, I need to exhaust the online one first. Yeah. All right. Then the couple of thank yous to Dr. Muhumuza, a couple of them. But if I may also just pick one question to Dr. Muhumuza. Dr. Muhumuza, we appreciated your take on the economic outlook, but we just wanted to also comment a little deep on the tax policy perspective. Yeah, how from you as an economist, yeah, what would be your take on the tax policy perspective generally, high level? Because that's one of the queries our clients are seeking online. Thank you, Doctor.
Thank you very much for the comments and whoever is out there. I think policy speaks also to the institutions that implement the policy, but most importantly, the strategy is the most important thing. Policies aside, what is our strategy to increase revenue mobilization? Compliance is just a small part of increasing revenue mobilization, realizing that policy objective. The bigger part lies in what is our strategy to grow the tax base. And here we're not talking about increasing the number of taxpayers. As we saw, the taxpayers are not that many. Practically 75% of our tax revenue comes from less than 1,000 taxpayers. So how do you grow that tax base in terms of strengthening the capacity of those individuals to pay? You can reach them. Many of them, we know them. But if they are not able to pay, so you want to get back into your strategy. If the stories I hear of government arrears, this is money government owes to the private sector. It's in the range of 7 to 8 trillion. This is money that would have paid tax if it was paid. So already the policy is saying enhance tax payment, but you government yourself, you're not paid the taxpayers. So that goes to strategy issues and broader policy considerations rather than a smaller policy on increasing tax revenues. How do you manage the whole ecosystem where the taxpayers live? So I think that's where the nightmare of issues is sitting, and we need to get in there. The taxpayers must, before they comply, or besides complying, they must be able to pay the taxes. So I would be more focused on how do I grow my taxpayers? And as mentioned, who is government? The bulk of the decisions of government are run by what we call political economy actors, people who are not actually in government. They will even draw the biggest budgets of government. I've heard of Atiak Sugar. It's not government, but can take a lion's share more than a government agency. So that political economy you want to understand is, what am I pursuing? What's the strategy behind Atiak Sugar? It's not bad to invest in that sugar, but in terms of tax revenue, in terms of growing the economy, what's my strategy? I think that's why I have serious issues with the way we manage the public sector policies and spaces.
All right, thank you, Doctor. I think the other profound economist, the current PS, always had his catchphrase, economics that works. Yeah, so we shall be looking and see if our professors are telling us economics that works. But yeah, thank you, Doctor. We very, very appreciate your take. Then Christine from our online audience is asking, if the 5% extra tax is passed, then the consumer has VAT of 18% plus 5%. The burden is too high on the final consumer. Yeah, so I think Christine is noting on the intended digital services tax, yeah, the WHT. So if I could just ask Jed, if you could just comment on that a little further, digital services and the net effect on the final consumer.
Thank you. The concern of 18% is already, I believe, whoever is consuming services from the digital providers who are registered for VAT, they're already feeling the pitch of 18%. But the additional 5% that is being charged to the digital providers, it is on the income of the digital provider. It is not taxing the final consumer. But what is uncertain is whether the digital provider is going to adjust the price to reflect the additional tax they are going to suffer. That one, I'm not sure. It will depend on the digital provider's pricing strategy, market strategy, and also consideration of whether this 5% is material to their revenue and operations. So if you find that, say, Google is seeing 5% tax being charged by Uganda, and that's a drop in the ocean in their revenue. So you might find probably the big players might not increase their pricing as a result of the 5%, but probably smaller players might increase their pricing. Thank you.
Thank you, Jet.
Ian, Council?
Yes, Ian is going to.
Yes, I just wanted to add on the digital services tax. It is not new in the world. Most of the countries around the world have tried to experiment on it, Uganda not being an exception. It's one of the proposals that OECD came up in order to tax the digital economy, because how do you tax something that's not tangible, that's not in your jurisdiction, but making money from there? But what the other jurisdictions have taken would be thresholds. For example, we know very well that Netflix does not make much money from Uganda. It's not one of their considered markets. Considered markets, I think, are 3 in Africa: Nigeria, South Africa, and Kenya for Netflix. So if you bring a digital services tax, for example, may now hinder such services coming into Uganda. Now, most countries have a threshold. You must be generating a certain minimum amount of revenue to qualify for that digital service. In Uganda, it's just blanket. As long as you're doing that, there will be a tax. So maybe the policymakers need to look at maybe a threshold for these services that we need in Uganda before we can chase away the investors. Thank you.
Thank you, Ian. Thank you, Ian. I think you all agree, digital services tax is here to stay. We can run, but we can't hide, yeah? And I think it's imperative that we listen to just the URA. If, Brian, if you could just comment briefly on digital services tax, yeah, because it's a hot cake out there, since what should we as the taxpayers press ourselves for?
Okay. Thank you. Jet, you talked about the digital services tax being some kind of withholding. Just to clarify, it is not a withholding tax. I think it is supposed to be paid like any other corporate income tax as part of the gross collections from a country. My comment on digital services tax. We have already collected money for VAT purposes on non-resident service providers. We have seen one that they are willing to comply and they want to help out on third world countries especially. I think this is one of those measures that we can get some revenue from these countries that are, or these companies that are deriving income from Uganda. VAT so far has been successful. The digital services tax has a potential to be successful. You have to realize that the 5% is a minimal amount of money. And we are hoping that that will not affect reason for investment in activities that will lead to taxation from Uganda. Thank you.
Thank you, Brian. I think for those of us who don't want to pay Netflix, we should start planning to go back to our UTV days and all that, so to avoid this thing, because it's here to stay. Yeah, but the next question I would like to pose it to Ian. Ian, there's a question for your space here. What happens to a taxpayer whose matter is already before the Tax Appeals Tribunal? I think the feeding of the ADR regulations, yeah? So how will they relate to matters already before the Tax Appeals Tribunal? Then I would also like you to comment on the second query. There is concern around payment of the tax, of the principal tax by December 2023 for the interest and other taxes. Yeah, so the query they're asking is, does it apply to all other taxes? Is it just income tax? So if you could take those two.
Thank you very much. I think the first issue was addressed. If you have 7 days to go for ADR, and you have 30 days within which to apply to the Tax Appeals Tribunal, you can lodge your appeal to Tax Appeals and then store that process up until we finish the ADR. Again, we need clarity on that because there's a mediation process that is also an ADR of sorts at the Tax Appeals Tribunal. So there's a conflicting regulation, but I'm sure that can be rectified with the URA. But the better way of doing it, apply to Tax Appeals Tribunal, because we know the URA takes its time most times. And then you go through ADR if you want to have it that way. On the second issue of the waiver of the tax by 31st December, I noticed it had a little bit of ripple effect. Now, there are two provisions. One is for clarification. Another one is to enable voluntary compliance. The first one is, I think in 2017, the law was passed that where the aggregate of principal tax, aggregate of interest and penalties exceeds the principal tax, the excess, no, actually the law was principal tax and interest will not exceed the principal. Interest and penalty will not exceed the principal. And my example is if you have principal of 20 million and you have interest, let's say of 40 million, interest and penalty, the law was to the effect that you can only go as far as 20 million, not the 40. Now, because that was the law, the ledger reconciliation team found it difficult to apportion the balance of the 20. So the law has come in to clarify and say the balance of the 20 is waived. So if you have interest and penalties, the most you can have is 20/20, not 20/40. Now, the law comes in further to say that if you have principal tax of 20 million and we've curbed the interest and penalties to another 20 million, we can waive the 20 million interest and penalties if you pay the 20 million by 31st of December 2023. So there's no contradiction. It is just clarification for one and encouraging voluntary compliance for the other. Thank you.
Thank you, Ian. If I were any of our clients in the building, please send through those questions because you can see you're getting free advice. This is billable advice. Ian would be happy to bill you for that, but yeah, he's happy to share his vast knowledge. Then to my colleague Jet, Section 25, yeah, income tax. We've seen an amendment. There's a proposed amendment to include MDIs and Tier 4 microfinance, yeah, entities in there. So one of our clients is asking, what should we expect in that kind of with that kind of amendment? What should clients in that space, but also clients of those MDIs and Tier 4s, what should they be looking out for?
Thank you, Edwin. Section 25 is being amended to include MDIs, microfinance institutions, as exempt from the interest capping rule. Or for those who might not be aware, interest capping rule means that if you're part of a group and you have debt which attracts interest, that interest expense you have, whether it's from a bank or elsewhere, you cannot claim the interest expense beyond 30% of tax EBITDA. That is earnings before interest, tax, amortization, and depreciation. In other words, it is trying to limit, that provision is trying to limit companies that are part of a group using debt as a way of minimizing corporation tax payment. So it helps to serve that purpose. However, there are certain businesses like financial institutions, banks, or microfinance institutions, which by the nature of their business, loans are part of their stock. It's like their stock in trade. So if you disallow the interest expense they incur, you're discouraging them from trading. And such businesses do not use interest or debt as a tool for avoiding corporation tax, because that's the nature of their business. You borrow, you lend. So we are seeing it's a good proposal that has come in to clarify that these businesses also qualify like banks do. There's been a problem where our friends, Brian and team, the way they interpret the current law of a financial institution is that, as far as they are concerned, that microfinance MDIs don't qualify as financial institutions for that exemption. However, our reading of the law is that they do qualify. It hasn't yet been litigated, and this amendment is helping to avoid those litigations. So going forward, it's a good proposal. However, for the past, there's a gap. And we hope that when we have discussions with our friends in URA, they will not go back to these businesses that now the law has clarified. It means you didn't qualify before. In terms of impact to potential clients of those institutions, we hope that the lending rates, because if a microfinance is lending and you are not allowing it to claim its expenses, which is interest the biggest, then it means that the pricing of their lending rates is going to have an embedded charge of the tax element. So we hope that probably the microfinance institutions will not include the tax aspect, since now that the law has clarified that they qualify for exemption going forward. Thank you.
Thank you, Jed. I think that's elaborate enough. Jed, I would like you to just pick up on another compliance query. One of our clients in here, John, is asking, his comment is, IFRIS in upcountry areas is close to impossible. Yeah, mostly for those in the construction sector. So would you just comment broadly on IFRIS and any other key compliance risks for our clients, South Asians?
Thank you, John, for that question. I suppose it being next to impossible, it is in relation to connectivity challenges, whereby, because for you to issue an invoice via, say, the portal, you need an internet connection. So if you don't have an internet connection, it means that you are not able to issue an invoice via IFRIS. And if you issue it outside, the commissioner already mentioned in the morning that for every invoice you issue outside IFRIS, there's a 6 million penalty, regardless of the value of that invoice. So meaning that for people who have connectivity challenges, need to look at alternative options. The URA has provided alternatives in the sense that if you're using the machines, they are electronic fiscal devices, but which also require a connection. But those ones have been configured in a way that you can be able to issue an invoice offline, such that when you get back online, that transaction would go through. Or if you're using system-to-system connection option, even if the URA connectivity is off, you can still issue an IFRIS invoice offline, and then once the URA system connection comes back, then that transaction will be captured, so you would not have a problem. So you need to look at the alternatives available.
Some clarification here, Ian, just before you come in. There's just some clarification from the person that asked the question.
Thank you, Jet. Just to clarify, precisely, I'll give you an example. We do some construction works on some transmission lines, say in Nebi. Now, the bulk of the costs are in materials like aggregate, sand, and fuel. Practically, you will not get anywhere where a supplier will give you IFRIS for aggregate or sand, even the fuel stations there. Thank you.
Thank you very much. And that is one of the biggest issues. Maybe URA needs to address it, because we have situations where clients come and they cannot offset their expenses because they don't have IFRIS receipts or invoices. And that becomes a danger, because the majority of the costs are to people who have no tins. You've hired TAN boys who cannot obtain a tin, and it's an industry issue. How does URA come into? So I'm asking a question also.
Thank you for that question. I think this points to non-compliance or refusal to be compliant. I think we saw the compliance pyramid that the commissioner projected earlier. We definitely have taxpayers who have refused to be compliant. And what does that leave us with? It leaves us with one of two things to do. Either we have to carry out enforcement action. Enforcement action means you go and issue agency notices on banks, you go and forcefully register the taxpayers but usually that should be the last course of action. What URA is currently doing is trying to do as much tax literacy and sensitization as possible. There will be elements who are hard to reach. Now, like a person who sells gravel in Nebi might be behind some mountain where URA does not even know the person exists. But what we ask of all of you is that if they give you some kind of receipt, albeit non-fiscalized receipt, you can give us that information for us to now carry out our mandate to get them to register. That will usually help, because we do understand that situations will occur where certain people are adamant and refuse to give you IFRIS receipts. But give us what you can and let us try and follow up by registering these taxpayers. Thank you.
Yes, Jet, you have an addition?
Yeah, I just want to add, in terms of this solution to John's challenge, because John's challenge is on purchase, not when he's selling. It's when he's purchasing materials. So the VAT law requires that your obligation as the purchaser is to ensure that if the person you're buying from is VAT registered, you have to get an IFRIS invoice. If that person is not VAT registered, you have no obligation as the buyer from an IFRIS perspective. So you wouldn't have a problem paying someone for sand or fuel if they're not VAT registered. The only thing is you need to check. You need to ask them for their TIN. Because if, for example, you're paying them 5 million or more on income tax, you're required to have a TIN. Otherwise, that cost will not be allowed. So meaning that you need to ask if the amounts you're paying are above 5 million. You need to ask for their TIN. And on the portal, you can quickly check whether this person is VAT registered. If they are not VAT registered, then you don't have a problem with IFRIS. But if they are VAT registered, then you need to ask them for an IFRIS invoice.
Just a quick one. Thank you for that. But what happens then when I have to file my returns and
So the expenses, so there's filing for VAT and filing income tax. I suppose you're referring to VAT or income tax or both. I need your address to send a fee note. So if you're filing VAT return only has IFRIS invoices. So meaning that that expense will not feature in VAT if you've purchased from someone who is not registered from VAT. Like any other expenses, there are so many business expenses that don't attract VAT and don't feature into the VAT return. But when it comes to income tax, that expense will form part of your P&L costs, which should be reflected in your accounts and therefore in your annual income tax return. But be sure that you observe the requirement of 5 million for 18. Otherwise, that cost will not be allowed for income tax purposes.
All right, thank you, Jet. I think Jet has addressed it. Ladies and gentlemen, for any compliance-related issues, feel free to reach out to any of our team members. Then the questions are coming in. We're taking note of each single of them, yeah? In the interest of time, we won't be able to respond to all. We're taking note, but we're going to respond to each of those, yeah, after the call. So allow me just give opportunity to 2 of our clients who are in here to ask, yeah? For our online audience, keep the questions coming. Our team is taking note, and we're going to respond to each of those. So, Rachel, if you could.
Thank you very much, the panel. My question is going to Brian from URA. The issue of carried forward losses having a cap of 5 years. I'm working with an investment firm, and as we know, companies in Uganda don't even get to see beyond their 50th birthday. Most of them see these carried forward losses as the incentive they can back on. You made a comment that you can't do a business for 10 years and all you're doing are losses and you continue doing business. These profits we talk about are accounting profits. It's just us accountants doing our expenses and we say you have a loss or a profit. There is a lot we do that goes in there. So businesses don't actually have only a strategy of making profits. They have they have strategy of positioning themselves in markets. They have several reasons as to why they start businesses. So for you to come up and say you're having losses for 10 years, why are you still in the business? I'm putting a cap for you, yet our own SMEs can't even go beyond the 5th birthday. So I think that cap should be widened from 5 to 10 just for our baby businesses. For example, I can give an example of Uber. It's here, but do we think that company is making profits for the time it has been here? Because really the investment that goes into those applications for you to order, and it's basically giving comfort to an investor coming into the country and saying, okay, in the US I use Uber, found Uber here, I think it's some company that is safe for me to move around. Such companies will stay in the market, but they will not be making profits for the next 10 to 20 years. All they want is to be positioned in Africa, be positioned everywhere you go. So I think Ministry of Finance and URA that carried forward losses, the cap of 5 is not helping.
Edwin, just before that, I suggest that we take the last string of questions so that they are responded to at once, purposes of managing time.
Thank you very much. My name is Ezra Ganzi. I'll be quite quick. The first question is to URA. The bulk of the tax in Uganda mainly comes from the large taxpayers, but the large taxpayers are really squeezed in audits almost half of the year. You come from VAT, you're going to withholding tax and income tax, they are reviewing your financials. So you're basically spending a lot of time trying to explain things that you should be focusing on doing business. So we thought that being in the large taxpayers office, you're basically going to get better services, you're part of the AEO, but instead the scrutiny that you get is worse. Then secondly, Ministry of Finance, after COVID, we had some funds that were put in UDB to support SMEs to be able to bounce back. But when you look at some of the requirements, I mean, you're requesting a small SME to have financials for 3 years audited. You're requesting an SME to have a governance, have a board, have ABCD. There's no SME that is going to have that. But these are people who are the ones who are supporting bulk of the trading, which would essentially be helping us to widen the tax base and grow the economy, but they don't have access to the money. So how are we supporting those businesses to actually be able to bounce back and start making money and start paying URA? Then the last one is to Stanbic. I'm glad that the head of SME is here. How are we supporting especially the people who are in the agricultural sector or the small traders? I'll give you an example. There are small circles or small group of people who put funds together, start to do agriculture. They require maybe 30, 40 million. They may not have a formal, they may have a club that is registered, but they may not have, all the formal sort of expected documentation that the bank would need. And also in terms of additional knowledge that they may need. So how are the banks actually supporting them to be able to access financing at reduced interest rates to be able to survive?
Thank you. And finally,
Thank you very much. My name is Robert Kakande. I work for a very compliant financial institution with a very big contribution to the 25 trillion that we have collected. So my question again is to URA, close to what he asked about, and it's about the tax audits that happen almost every 5 years to the large taxpayers. My understanding is that after the tax audit, the tax ledgers are updated, and if there is any outstanding tax, it is paid at that point in time. The recent project in URA of updating tax ledgers is reopening closed years, dating as far back as 2013, 2014, and we are wondering whether this is another audit that is taking place. But also, I want to find out whether URA posts transactions on closed tax years, because you do a tax audit and you feel everything is closed, but at the end of the day, you're told that your tax ledger has an outstanding dating as far back as 2013. The other one is on the proposal to move on the VAT account, and whether these on the VAT account, other accounts will not create more confusion in the tax ledgers. Thank you very much.
Brian, a couple of them were raised to you. I think you can address most of those.
Okay, I will attempt to answer some of these questions, but since we make policy and changes with my colleague from finance, we shall both try and give you the rationalization of some of these policy changes. The issue of carry forward losses for 5 years being too short, that is a genuine concern, but I think Gerard should comment on that. Go ahead.
Okay, thank you very much. Very good concerns on the loss carry forward limitation. But I think it is important to recognize where we are. Our corporate income tax regime is one of the worst performing in Africa. It is giving us less than 1% of GDP. If you look at the performance of the CIT regimes across sub-Saharan Africa, we are at the tail end. Something is very wrong, and for sure we need to do something about it. Having said that, we've spent a lot of time studying our regime and what is wrong with it. Is it a policy issue? Is it an admin issue? But for sure, one of the things we note is the fact that, income tax is supposed to be a progressive tax, meaning that somebody who earns more actually contributes more. Uganda's income tax, particularly the corporate income tax, is the other way around. People who earn more pay relatively less than those who earn lower. Now, just to give you some numbers, we undertook some studies on the burden of the corporate income tax, what we call effective tax rates, and it was ranging between 0 to 4%. This is as a percentage of the turnover. About 65% of the taxpayers across that terrain were actually returning 0 consistently for 5 years. 65% of all corporate income tax returns was seeing was zero consistently. 5 years. We stopped at 5 years. It would have been interesting if we extended it. So, but that was against the background. At the time we did that study, we were seeing what we call the presumptive taxpayer, the ones who are below 150 million, were actually paying higher than what the 65% of the corporate income taxpayers above 150 million were paying. So something was generally not right. You can't run an income tax system like that. It is generally inequitable and it needs to be urgently addressed. So what we did is basically to benchmark other regimes and try to see what is the design of their systems, aside from the administration. This policy of having a cap on the losses carry forward is not absolutely crazy. It's very common around the continent. We benchmarked other jurisdictions. Others have different formulations. They exclude certain things. They design it slightly differently, but the idea is to try and remove the incentive to indefinitely take advantage of these losses and to try and share the benefits of undertaking this business with government. As you undertake the business, government also picks something as you operate. So that is the background of where we are coming from. It's informed by a study. We can be happy to share this information. But also, in case you feel strongly that the 5 years is quite limiting, you can make a proposal, preferably from your vantage point, maybe as an industry, what you see, and we listen. We listen, but we also inform you where we are coming from. Then maybe there was a question on the SMEs. I'm from the tax side of things, so I'm not too competent to respond to the support to SMEs. I can only tell you what we do for SMEs from the tax side of things. But just to point you in the direction of the number of initiatives government has implemented, apart from the UDB thing, it may not be for the really small ones, but there are quite a number. The EMIOGA, there's the PDM now, and quite a number of things going on there. The main issue is the organization of all these associations in order to access the money. One of the experiences we are seeing with the PDM, for instance, is that money is released, it is seated there in banks, not being accessed. Why? Because of poor organization. And that's where we are putting a lot of effort. It's not just a question of the money. There's a lot of other things which have to buttress the infrastructure in order for it to work.
Let me attempt to respond to the issue on audits. Our friend said large taxpayers are subjected to numerous audits. Even after they have been audited, it takes a short while before they are re-audited. I think we can all agree that the large taxpayers are the biggest contributors to revenue for the economy. And any error that is made in the books of a large taxpayer might have a gross effect on our revenue collection. So the point is to be able to curb any misgivings or any misclassification of income before the 5 years elapse. So it might seem like an inconvenience, and for that we apologize, but I think it is necessary. And the reason because it's necessary is, one, the law provides that you're mandated to keep your books of accounts for 5 years. Now, in the event that we do not check those books in a 5-year period after you've been audited, you may come up with a defense that you have lost or destroyed these books and therefore cannot give us this information. So this is a precursor to making sure that we do not have such problems with the large taxpayer. The second issue you talked about was whether the audit reports or audit findings are posted on the tax ledgers. I believe that is so. I think when management letters are communicated to you, that information is supposed to be put on the ledger of the taxpayer. Unfortunately, fortunately, I am a lawyer, and I do not look at very many books of accounts, or the ledgers for that matter. But I believe our audit team is mandated to do so. And if that is not being done, then that is something that needs to be urgently addressed. Thank you.
Yes, thank you, Brian. I think, Aaron, you had a question that was posed to you.
Yeah. Thank you. The question was directed directly at that Stanbic. We believe supporting SMEs, especially within the agriculture sector, which is the cornerstone of the economy, we take that very seriously. So over the last 2 years, there's been a development of what is called an EARF, or an Economic Recovery Fund, within the bank. And a key component of this is agricultural SACCOs and savings groups. So we've taken a different approach to this. First of all, we've offered them free banking. So 0 transactional fees, 0 minimum balance requirements. It's completely free of charge to open an account for a SACCO. Then we realized, oh, this is not enough. We need to support these guys, or these groups, with formalization. So we have a team that's just purely looking at how do we get them registered formally through the various district commercial officers. How do we get them fully set up and running? Beyond that, the funding or the credit that we're giving them is massively discounted at interest rates as low as 10%, just for these SACCOs that are especially the ones in agricultural, within the agriculture sector. Again, further taking this forward is digitization of the SACCOs. How do we ensure that they actually have some form of record keeping that can be utilized for future purposes? So we've partnered with local fintechs, the Akelo Banka and Sibuko, players that were starting to set up, incentivize them to then go ahead and get them on digital platforms where they can actually run effectively and efficiently. And finally, really is overall, it's bringing them much closer at a decentralized level, giving them the right level of focus, the right level of attention. I mean, there's 18 million Ugandans that are present within SACCOs, VSLAs. There's over 300,000 of these such groups. The formalized ones are not that many. So our job as the country's biggest bank is to ensure that we bring them into the formal economy. Hopefully, Brian doesn't go chasing after them very quickly. Allow us to get them to a big enough place. But we've got a lot of support from Ministry of Finance. We were doing, they've really come in to help us, and a few other players in this space. So feel free to reach out to anyone at the bank. You'll be directed to the SACCO desk, and you can get a lot more information. And this is going to cut across all the other sectors, specifically within the SME, to support our SMEs to really, really grow. Thank you.
Thank you, Aaron. Ladies and gentlemen, I think these esteemed gentlemen deserve another round of applause. They sacrifice their morning to come and share with us. So as they take their seats, let's just appreciate them more. So we've come to the close of our tax breakfast. The physical session comes to an end, but we carry on. The debate carries on. The engagements carry on. You have very tricky issues, so we need to get a very candid discussion, a one-on-one. Feel free to reach out to each of us. To our online audience, we're very, very honored with your presence, and we took note of your questions. We shall have our teams respond to each of them. But allow me invite Ian just to thank you all and close the ceremony.
Thank you very much. We don't want the breakfast to become a lunch, but I want to thank you, special groups of people, the team from BDO. Please, a round of applause team for BDO. The team from Signum. Please, a round of applause from the team from Signum. The panelists. Please, a round of applause from the team from panelists. And finally, to the audience, a round of applause to yourselves. Thank you very much. This is a second breakfast we're having as Signum and BDO. We're going to make it better. Please give us feedback on how to make it better. Next year, we shall have the same exact discussion. As you heard one of the speakers said, it's the first time they're seeing it being discussed before the laws become an act. And that was intentional because we want to make sure we fulfill your dreams as we nurture your growth and offer peace of mind. Thank you very much for being here. And we want to allow you to leave at leisure. I think there's still some breakfast. Speak as you go out. And thank you very much. Until next year, thank you. Thank you. Oh, just one last thing. I know many of us have tax issues. We've given you a small booklet